heart's a stone. Voice will echo, need no phone. Ruled by the laws above. Nature shows me, makes me taught. I could climb this mountain now, rise above the clouds and see. Well, oh, the falls that kept me strong. Never did I mean no wrong. 'Cause I ain't looking back. I ain't looking back. Ain't looking, oh, ain't looking back. Ain't looking.
Every crisis creates an opportunity. In Africa, the youth, rich natural resources, a booming tech sector, and fast-growing economies are fueling a green energy transition, creating unicorns.
We plan to invest $1 billion in Africa over 5 years.
Establishing trade deals.
The AfCFTA will actually create the largest free trade area in the world.
That could get the continent back on track.
In our strategies of reconstructing is to put human beings at the center of it.
After the pandemic and a commodities crisis crushed confidence and stalled growth, investors, corporate leaders, policymakers, and thinkers are watching as the continent repairs, renews, and rebuilds to create a more prosperous future. This is Bloomberg Invest, Focus on Africa. Please welcome Bloomberg Live's Deputy Global Editor, Malika Kapoor. Hello and good morning and a very warm welcome to all of you and a very warm welcome to Bloomberg Invest Focus on Africa. Whether you're joining us virtually or you're here in the room with us, thank you for being here. We're really excited to have an in-person event again. Today's program is focused on rebuilding and reimagining Africa. There's much excitement on the continent about the tech sector and newly minted unicorns, the desire to understand and to break the infrastructure paradox, about green energy and sustainable development. Today at the Sustainable Energy for All Forum in Rwanda, UN Special Envoy for Climate Ambition and Solutions, And our founder, Mike Bloomberg, has announced $242 million to expand Bloomberg Philanthropy's efforts to accelerate the clean energy transition in developing countries where power demand is projected to rapidly grow and there is abundant potential for solar, wind, and other renewable energy capacity. And we'll be talking about Africa's green energy transition later on this morning. We will hear from multiple stakeholders who are invested in Africa's future, the doers, policymakers, CEOs, central bank governors, innovators, and thinkers who are all making an active difference to lives and livelihoods in Africa. But before you hear from them, I have a couple of quick announcements. First, I'd like to acknowledge our founding sponsor, Apex, Angola's private investment and export promotion agency, and our presenting sponsor, Standard Chartered. Now, this is a hybrid event. We have people joining us virtually, and so for our virtual attendees, if you experience any issues with audio or video, please refresh your browser. And if that doesn't work, use the chat box in the bottom right corner of your screen for support. Now, we'd love to hear from all of you throughout the day. You can submit your questions, please do, by scanning the QR code you see on the screen. It's that QR code right there. So just point your phones to that and you'll be able to submit questions. And I really hope you do. We do want this to be interactive. And if you're joining us online, you can submit questions by opening the white tab on the right side of the video window. You can also engage with us on social media. We are very active there. The hashtag is BloombergInvest. So Twitter, LinkedIn, Instagram, post your pictures, share your pictures. We are very responsive on social media. We've also launched a weekly newsletter called Next Africa. Please subscribe, and you can subscribe to that by just pointing at this QR code. It's a fantastic newsletter. It's written by many of the journalists who are actually in the room here with us today who've come in from Africa. And you'll be able to read the biggest stories on where the continent stands now and where it's headed. Now, we're going to be in this room till approximately 1 p.m. And after that, please join us for a networking lunch outside. Once you have your plates, please feel free to join one of our networking hubs. We've identified 4 sort of comfy corners, cozy corners outside. Each of them will have a placard. And the placards have these topics. Walk over to anyone that catches your fancy, any particular area you're interested in. And a Bloomberg journalist will be there to just facilitate some conversation amongst all of you. And that's it from me for the moment. I'll be back with some more sessions later on. But for now, please join me in welcoming Sina Lawson, the Minister for Digital Economy and Transformation in Togo, and my colleague, Africa's Managing Editor, Arajit Ghosh.
Thank you, everyone here in London and across the world for joining our marquee Bloomberg Invest Conference with its inaugural focus on Africa. We have an action-packed few hours with a host of excellent speakers and panelists. But it's my privilege, really, to kick off this event. I'll be speaking to Sina Lawson, Togo's Minister for Digital Economy and Digital Transformation. Ms. Lawson was the force behind Novisi, the digital cash transfer program in Togo, which delivered monthly payments to about a quarter of the country's adults during COVID. She has done a lot of other things and a lot of other ideas to transfer her country's economy, and some of them may benefit other emerging markets as well, and we'll be talking about that. But let's start with Novisi. The program took just about 2 weeks to develop, ma'am, and delivered cash to people just when they needed it. Minister, what are your plans to scale up that program, and do you think it can help other emerging markets as well?
So, good morning, everyone. So I'm going to say a few words about the Novisi cash transfer program. It's a program that we developed in Togo during the pandemic to transfer cash through mobile means to the poorest individuals. And basically, it was a platform using USSD, which means that people didn't need to have internet access. It was just a short code. They would register using their voter's ID because it was a biometric ID. And within minutes, in less than 2 minutes, they would receive 1/3 of the minimum wage. So we were able to pay out 25% of all Togolese adults, and we spent $34 million. But I think the innovation in OVC was more than just the payment platform. We used also AI algorithms to determine beneficiaries. And we used 2 AI algorithms. The first one was used through satellite imagery to determine the poorest areas of Togo. And the second one we used using CDRs, mobile telecom CDRs, to determine the poorest individuals living in these poorest areas. So based on this methodology, and we worked with UC Berkeley to use and develop these algorithms, we were able to pay out these people. So I think it's very important because it shows that we can use innovation in Africa, we can use innovation in the public sector, and I can say that we're the only country in the world that was able to pay out people based on AI, you know, during the pandemic. And so in terms of what we want to do next, we want this platform and this methodology to be a public good. So, and we want to be able to actually share it with other African countries because a lot of them reach out to us and say we want to be doing the same thing. And obviously it's complex because it has various different parts. Some of our countries don't have biometric ID, and you want to make sure that when you pay people, you're paying real individuals, unique individuals, otherwise you're spending the money, but you don't know where it's going. And the other thing is that we were willing to use CDRs and try out new things, and some countries are going to be reluctant in doing so. So we want to support other countries to do the same, and we also want to say that like we really believe Africa always, we need the best of technology in order to, you know, in order to grow, and we are willing to be the test bed for, you know, new approaches. So that's, you know, my take on what happened during the pandemic.
You talked about biometric ID. I mean, something like Aadhaar, which India has done. Do you think that, you know, do you have any plans for something like Aadhaar, and how will that help you increase financial inclusion, for instance?
So this year, in 2022, we're rolling out biometric ID for all our citizens, because when we launched Novici, obviously, because it was voters' ID, we were able to identify only people who were 18 years and older. And so it was very important, it is very important for us to have biometric ID for all our citizens, because maybe in the future we'll need to develop programs targeting people who are 15 or 5 years old or 10 years old, so it's very important. And we were inspired by what India did. So basically our biometric ID project is a model. We're using, you know, similar platform as India, and we got lots of support, and we worked together to develop this project. So we're launching it this year, by the end of this year.
Right. And do you think it'll be linked to banks, etc., as well?
Like, yeah, of course, because we worked with the banking and the Bankers Association to make sure that it would fill the KYC needs of banks. What we're also planning to do is that while we're giving biometric ID to people, we're giving them SIM cards and mobile money accounts. So by the end of, you know, the rollout, every Togolese with a biometric ID will have a mobile banking account as well.
Well, that's interesting. I mean, just talking about mobile money as well, I think, you know, obviously Kenya pioneered that, and it's all over Africa. Do you think that has actually helped increase financial inclusion in Togo as well, the mobile money, and across Africa?
Yes. To give you an example, when we launched Novici, a lot of Togolese didn't have mobile wallets. And so we worked with mobile operators to say that the first wire that we would do would create mobile wallets for these individuals. So that's how so obviously we saw an increase in the number of people who had mobile wallets, because so we were able to support 920,000 Togolese, but approximately 1.6 million Togolese registered onto the platform. Some weren't beneficiaries because they were living in areas where we didn't implement mobility restriction measures, so we didn't need to support them financially, and others got the money, but everybody had their mobile wallets created at that time.
Okay. You talked about the unstructured supplementary service data, or USSD, but obviously that has its limitations. And I guess you want to go digital going forward. But if you can see in this chart here, almost the internet costs in Africa are extremely high, almost 20% of income per capita. Minister, you have said that you want to cut the cost of accessing internet in Togo. Why is it so important for you particularly, and how are you going about achieving that goal? And just one supplementary question to that is that you have Google's Equinor cable landing in, or it has already landed in Togo. How is that going to help your plans?
So it's very important to understand that when we talk about telecom in Africa, everybody thinks about mobile, and mobile technologies have helped us a great deal. But we do believe that now, in order to really grow, we need fiber infrastructure, which is fixed line infrastructure. And in order to invest in fixed line infrastructure, we need states, we need governments to participate. We cannot rely upon the private sector only investing in mobile infrastructure, because we need it fast and we need it at price points where actually people can afford to have fiber to the home. And so in Togo, our vision is to combine it with power lines, because when you deploy fiber infrastructure, what costs a lot of money is to dig. So let's not dig and use existing power lines. So that's number one. And in Togo, approximately 50% of Togolese households have access to electricity. So we're thinking that if we can deploy fiber on power lines, it will mean that 50% of all Togolese households will have fiber to the home, which is extremely powerful. We think it's going to transform, Togo forever. But that's number one. The second thing, though, is that when you live in a country where 60% of, the individuals live below poverty lines, you need to make sure that once you deploy the infrastructure, you have to retail it at a cost they can afford. And that's why it's so important for governments to step in to de-risk this type of investment. So right now what we plan to do is that we're looking for financing. We want to put 2/3 of the money and have the private sector put 1/3. It's very important for us to co-invest. So it's not about us doing it all, because it doesn't make sense. And we're not, we're not telecom operators, and we don't want to be. It's about making sure that the risk in investing in Togo is going to be low enough to attract the right kind of investor. And it's important because we partnered with Google to have the Equiano cable land in Togo, which is going to be the most advanced cable landing in Africa this year. But it's just coming to the shores. And so what we want to do is to make sure that we continue investing in fiber in the country so that the capacity goes everywhere.
Excellent. And do you think this cheaper costs will help you kind of build a startup ecosystem like in neighboring Nigeria, for instance?
Yes. So the first thing is that a lot of people talk about technology, but the first step, the fundamental, is the infrastructure. So I cannot, talk about, digital ecosystem if I don't have the infrastructure. So of course it's going to help. And I also believe that in Africa there's a lot of innovation. We innovate a lot, we recycle a lot, we do a lot of things that you can, you don't imagine. So for us governments, we have one responsibility, is to give access to the internet, because once people have access to the internet, a lot of things are going to emerge that we have no idea of. So let's just make it happen and see what happens. Especially when you think, for example, about education. A lot of educational content are not available on the continent because in some specialty, subject, and I don't have any in mind, but it's sometimes very hard if you're interested in one very specific subject to find, this type of content. So that's why it's so important, because it means that wherever you will be in Togo, you will have access to whatever content you want to read, which is, again, very powerful.
Let's take one quick audience question as well. So the question is that with the biometric ID, how, with the barriers of reaching people in rural areas where accessibility is different, how will you implement a biometric ID?
So, so we were quite good in implementing voters' ID, because more than 93% of our adult population has a voter ID. And in terms of what we did in rural areas was that the voting, when we launched the campaign, we actually registered people in school, in the education system. So people actually do know where to go. So that's number one. Number two, we worked a lot with local authorities. They were the ones going and talking to villagers to tell them how important it was to have a voter ID. In this instance of giving ID to all our citizens, because of Novici, people understand the importance of having an ID, because you can get, subsidies, you can get financial aid, because most of the time, you just need to make it worth it for individuals to have an ID. Sometimes, you develop programs that don't work, and people don't really, when you live in the middle of nowhere and you very rarely interact with the state, you don't really think that you need an ID. And why would you actually go bother spend some time? Because a day to go and register is a day where you're not actually working and you're losing income, okay? So they're in a rational decision-making process. But when they understand that because they're going to have biometric ID, if they need support from the government, they will be more likely to receive it, then they'll go and have, and get registered.
That does make sense. Last month, let me just pivot to another interesting development in Africa. Last month, there was a rather dramatic development in the Central African Republic. The country enacted a law making Bitcoin legal tender. You can see from this chart, for instance, Togo is among the top 10 adopters of Bitcoin or cryptos in the world. Do you think this is a way forward for Togo, or would you be vehemently opposing it?
I'm not going to oppose it, that's for sure. I think that what we need to understand is that if there is a need, someone will come up with a solution. If Togo is adopting Bitcoin so much, it's that there is a need to transact. And it's not really about, I'm sure it's not being about Togolese transacting in Togo. It's really maybe about Togolese having access to other African markets or being part of the global economy. So does Bitcoin, it fits the need? Maybe it does. And if a lot of people, are users of Bitcoin, it must meet their needs. As far as government, the Togolese government is concerned, I don't think that we have a view on this issue yet, because we have yet to understand it. I have yet to understand it, so I'm not going to push for. But most of the time, we're keen to adopt innovation and see really if it can help us be part of the African free trade area, for example.
Yeah, I was going to the African free trade area as well, and we just have 2 more minutes. This has been discussed for decades, the African free trade area. How excited are you about it? I think it's probably the closest to implementation right now. And how will it benefit small economies like yourself?
Yeah, so we were very early adopters and of the free trade areas. We supported it. We're a small country. We have less than 8 million inhabitants. So, of course, we're going to support any agreement which is going to open the rest of Africa to us. it creates a lot of opportunities, but we still have some challenges, and we think technology is going to help, notably in terms of cross-border transactions. A lot of fintechs right now are focusing on that, and it's very important. We also need to harmonize our regulations, because the regulation of Togo is different from the one of Ghana, and we transact a lot. So there's a bit of work to do, but we do believe that technology is going to help a great deal, and we also do believe that it's a need. So if we don't step up as government, someone will find the solution for us and will bypass us and make us irrelevant. So, you know.
So will crypto be a solution, is according to you? It could
maybe, maybe. You know, we're not against it. We shall see, you know.
One last question I have for you is, what is your biggest concern for Africa, West Africa, Togo, in the next year, 2 years?
I mean, in the next few years, it's going to be digital skills, or skills. I mean, I shouldn't be saying digital skills, but this, you know, skill set. During the pandemic, when we started to vaccinate our citizens, you know, we started like the rest of the world saying, okay, let's start with people who are 50 years and older, and there was almost nobody. I mean, half of the population is less than 18, and 75% is less than 35. So we actually do need to focus on skills, because we do need to find jobs for this young population. So that's a huge challenge that we face, you know, and we're going to continue to face this challenge for a while.
One last question from the audience. I guess the question is, how will you capture the data, and how easy for you is to capture the data from all your citizens?
Which data? I mean,
I'm assuming biometric data.
No, biometric data, it's, you know, you come up with the, you know, the technologies, you have tools, it's easy. I thought the question was, how to create a data-based economy.
Is that the question?
And so maybe it's the question, because what we're doing right now is that we have this vision that we need to have a platform on which all the database and all our IT system will interoperate. And we want to create this ecosystem where the data by default will be open and given to the public, you know? Because when you think about the amount of data that the administration manages, it's a lot of data, but the data was collected by the administration for the administration, never really shared with the public. And some of the data is really not confidential and shouldn't be, you know, if you have data about agriculture and you just sit on it, then it's against the very, you know, principles of digital transformation, because in this digitized world, when you collect data, it has to serve a purpose. And the purpose, we think, is actually to share it with the public. You know, what we did is that we hired a company, and for the past 9 months, we sent this company out in the country to identify all social infrastructure of the country. They went in every schools, hospitals, schools to count the number of students, the GPS coordinates of the school, the number of buildings. They went into hospitals to count the number of beds, the GPS coordinate. They put, you know, we kind of referenced all the infrastructure of the country on a single platform. And we want to give access to the public on this information. So why? Because we think that a lot of innovation can come from the private sector. What is hard to have access to in Africa right now is information, you know? So you want to go in country X, you want to invest in agriculture, you don't know where to go. You know, you just don't know, and you go and address the public sector. And most of the time, you know, when you deal with the public sector, they're not very efficient, they're not quick, and you're like, you know, and so it's very important once we have the data, once we collect it in a consistent manner, to just, you know, give access to the majority of the people to this data.
Ms. Sina Lawson, thank you so much for your time. This was excellent. Thank you.
Thank you.
ma'am.
Thank you.
Kenya was known as the Silicon Savannah, name coming from the Silicon Valley. A lot of early adapters in the tech space started creating a community and building products that has now led to the creation of the African tech space.
After over a decade of development, Africa's startup scene is booming. Last year, the tech sector attracted a record $5 billion, more than the total amount raised in the previous 3 years combined.
It's actually kind of mind-blowing in many ways. The pace of growth in the last couple of years is incredible in terms of the amount of funding coming into the continent.
And that is particularly because there was a lot of interest and excitement from US investors. We saw some really scaling up their investments.
The continent also saw the creation of a record number of 5 unicorns, private companies valued over $1 billion. And this year looks even more promising.
Please welcome Tim Steele, CEO, Copia Global, Yemi Lalude, Partner and Head of Africa, TPG, Isis Nyong'o Madison, Co-founder, Women Work, Principal, Asphalt & Inc., and Bloomberg's Samuel Gerber.
Thank you, everyone, for joining us. And thank you for the previous conversation. That was a very lively conversation that actually brings us to our next topic, which is the Africa tech space. We take it from Togo, we expand it to the continent. And as the video showed, last year was a very impressive year for the Africa tech space. Some $5 billion USD was raised by startups. And this compared to the previous 3 years, is still higher. And some of the opportunities and some of the challenges that are on the continent are part of the reason why we are paying attention to this tech space. And so with us to have this conversation today, we have 3 very distinguished guests. We have Yemi Lalude, who is at the TPG, which is one of the biggest funds in the world that are managing over 13 billion globally. I believe, and then Isis Nyong'o, who has been in the space for over a decade. She has worked with Google, with MTV, and has run her own startups, so she knows the ecosystem in and out. And then Tim Steele, who is the CEO at Copia Global, which is one of the startups that is operating in East Africa. So luckily, we have an investor, we have an operator, and then we have someone else who knows the whole ecosystem. And I would like to begin this conversation kind of like from a broader view, and then we'll get into some themes as we get into it. And to Yemi, kind of the question of $5 billion was raised last year. This is exceptional compared to the previous years. Like, what happened? What changed?
It's a very good question. What changed in 1 year? I've been a technology investor myself for the past 20 years, and I moved from Silicon Valley to set up a VC firm on the continent about 12 odd years ago. So I've really been waiting for this day, for us to be able to say what you just said, which is $5 billion invested in 1 year. I guess there are a few things. One is that over the past several years, the underlying infrastructure that is required to be able to build technology businesses has been developed. So that's made it possible for people to go out and build businesses. I think that's a big factor. Another factor is the influence of something called Y Combinator in Silicon Valley. So a few years ago, probably about 3 years ago, we had the first few African companies go through a Y Combinator, and those companies have, several of them have actually done quite well. That really increased the profile of the African investment opportunity in Silicon Valley. And the way things work in the valley, once one person starts to look, all of a sudden everybody starts to look.
Yeah.
And then you get this flood of money coming into the continent. So for me, very, very excited, and hope it continues for a long time.
Yeah. I mean, you've worked on the continent from South Africa, and now you're based in London. But Isis, like, you have a very good view from East Africa as well, where most of these things began back then. How, what changes have you seen over the years to come to this penultimate time?
Yes, thanks, and glad to be here. I mean, I agree with what Yemi's already said, and I think that the transformation on the infrastructure cannot be understated. I mean, it's been hugely transformative in most markets, and also while there's always kind of this drive to keep bringing down the cost of data, improve the infrastructure, the cost of data has really fallen significantly over the past decade. And so just the internet actually just being more accessible. And on the skill side, I'm glad the minister mentioned that. That's a big piece of not only what needs to kind of continue, but also has been the last several years, huge efforts to develop digital skills in different ways. So you actually start to have a market that is, we always had the numbers. We didn't necessarily have the people online. We didn't necessarily have the access and the ability to actually start to use a lot of the applications that were being developed, certainly being innovated on in the previous 10 years as well. So that's been a big piece. And I think certainly the, a few exits have been, really gotten, because that was always the question for a number of years, will there have any exits, will there be, and so that has also kind of certainly stimulated a lot more interest as well.
Yeah, I mean, and I think that trend is continuing in 2022. In the first 4 months alone, I think we've raised over $2 billion on the continent. And one of the companies that raised money, or at least announced, is Copia. You raised 50 million at the beginning of the year. Could you just tell us the difference in this round compared to the previous rounds and how that investment process has changed?
I wouldn't say the process has changed. I think investors' fundamentals are still the same. They're still looking for organizations that can scale, organizations that have built up track record, organizations that can reach profitability at an acceptable future point, and organizations that have business models that are replicable across the continent. And I think that's what we're starting to see more broadly, that there are the unicorns that are emerging are not emerging as unicorns because they're ideas now. They're emerging because they, like we have tried to do, is create platforms that are building significant number of customers that are returning and adopting the value proposition that's being offered and utilizing the emerging technology that's on offer, not just from a consumer interface perspective, but actually to deliver successfully the business as well.
Yeah, I mean, one of the things that comes up when you're discussing taking the split in Africa is there's some divisions like Francophone and Anglophone, or Sub-Saharan Africa and then North Africa having its own kind of space. But for Copia, I found it interesting. It's an e-commerce platform, but it's not the same model as, say, Jumia. What's your thesis of scalable e-commerce businesses on the continent?
So the business that we've built is a B2C business, which is focused very much on the 750 million emerging middle and lower income consumers across the continent. Yes, there are different operating conditions in Francophone, in East Africa, in Southern Africa, and the Maghreb and so on. Those conditions are different, but fundamentally, the needs of a historically underserved consumer that has a very small wallet size, that has limited access to the internet, and has not had choice and access to fair pricing and so on and quality, that remains the same across the continent. And I think so long as Copia does, you stay focused on the needs of that consumer and building an offering which is appropriate to them, then you have a model which can be adapted and adopted anywhere.
Yeah, I mean, something interesting that came out about Copia was, I think, 70% of the agents that you have happen to be women as well. And kind of it goes back to the same conversation of the Africa's economy, at least the SME part, is run by women. And that brings us to this conversation of, if the economy is being run by women, then how comes the investment space in the tech space is not reflective of that? And ISIS, why is that? And kind of also maybe go into what's being done to close that gap.
Sure, and just to give you a sense of order of magnitude, I mean, of the $5+ billion raised last year going into early stage tech, different reports say slightly different things, but the ones that have gone into kind of women-led businesses is like less than 1% or something, less than 2%. It's really low. And while it's also helpful to appreciate that of the money that's gone in, most of it's gone into fintech. There's some mega deals, so there's some kind of skewing around the overall pie. But I think when we look forward and saying, the continent's probably going to be raising 10x of this in the next 5 to 7 years, we need to really look at what's going on with money not flowing to female founders. I think a lot of it is, I think it's just, it's happening by, not by design, certainly, but, there's a number of issues that have come up and solution. I mean, the way that many people are thinking about it is, one, you don't have a diverse enough pool of investors, right? So in terms of fund managers, LPs, I see members predominantly male and predominantly foreign investment. And so looking at how do you actually really drive more women to, those decision-making processes, that when you look both at how deals are sourced, and very much the warm intros, the networks that is in many places, and those tend to be gender specific. So if you start to kind of diversify on the funder side, people to actually bring in more diverse networks coming into, let's say, the pipeline deal flow. There's also a lot of, both research, but also people's lived experiences on actually fundraising and bias that comes into the process itself. So women being looked at as more, what is your track record, more like this is going to be really challenging, versus men are kind of asked more kind of future-oriented, potential-oriented types of questions in the process itself. So I think a lot of the, and there's a lot of very active conversations, certainly in Kenya and Nigeria. This is not like something that has not been discussed in a lot of, across everything from the founders to investors, and we're starting to see a lot more investors deliberately bringing in women into, into the funds at the partner level, et cetera, in those that were not necessarily had any gender lens, any type of, gender lens, aspect to their investment. And also saying that LPs are also asking questions and giving technical assistance in different ways to just bring in, widen the pool, both from the pipeline side, but also in the decision, and they're very much interlinked.
Yeah, I mean, we actually just had a story on this gender gap on Bloomberg.com, and it's just like, women fighting this tomato seller cliches, because you expect African women to be selling tomatoes on the side of the road, which is not necessarily the case. And it shouldn't be. Kind of just following that, Yemi, over the past year and 2 years, especially during the pandemic, we have seen a lot of deal flows going through, and partly that's why we've had this $5 billion investment. But that has also raised some of these questions. Also, the question of the gender question has also been raised, but also of governance and due diligence. I'm not going to go into the details, but there's something I think you call the Zoom deals. Can you just talk about the difference between how deals in Africa are made and how deals in San Francisco are made, and what the two sides can learn from each other?
I guess the more fundamental difference is between the approach of a typical venture capital investor when you go to do a deal and a private equity investor. Right. So on the African continent, historically, everybody was a PE investor, i.e. you're investing in real assets and so forth. So you spend a lot of time doing due diligence. You hire accounting firms to look at the books and so on and so forth, right? So that's sort of standard PE type work. And the venture business, it actually doesn't work that way for several reasons. One, the companies are much smaller. So there's, many times if you're doing early stage investing, there are no books to look at anyway. So historically, it just hasn't worked like that. But the whole system was contingent on, so let's say you were going to lead a Series B deal. You did that with the understanding that the institutional investors in Silicon Valley who led the Series A had done their jobs, right? So typically you would do what's called a bring down due diligence. So what's changed since the Series A, which means you assume that the prior investors did their work. Now the problem with that in a new environment is that you don't necessarily have this whole ecosystem of institutional investors who've done the work before you. So if you don't do the work, then there's a problem, right? Because somebody has to do the work, somebody has to be on the board, somebody has to be watching it. Everybody can be sort of remote and hoping everything goes well. So that's one of the things that I think for all of us in the industry is quite important to focus on. Certainly from a TPG perspective, we take it very seriously. So we apply the same level of rigor to all of our investments, whether they're Series B investments or a leverage buyout. But as we get more and more money coming into Africa, certainly if I were still at my old firm in Silicon Valley looking at a deal in Africa, I wouldn't just go do a deal without somebody who is a knowledgeable local investor investing alongside us. So at least we know there's somebody who understands the local environment that can help do the groundwork and ensure we don't run into any issues. So that's actually quite important. But the reality is, look, in an up market, there's a big fear of missing out. Everybody wants to get deals done. So you're going to have this everywhere in the world because deals are getting done in 5 minutes. Obviously, we have a correction now, so hopefully there'll be some more discipline in the process going forward.
Yeah, I mean, interesting you bring out the FOMO part, but apparently there's also JOMO, which is the joy of missing out on on some bad deals. And team on this, like, how do you prepare your company? How do you prepare yourself when you're approaching investors so that these metrics are met, this due diligence and governance issues are already addressed?
Yeah, I mean, in establishing a business like Copier, you continually wear two hats, the one that runs the business and the one that raises money, and they frankly take a virtually equal amount of time, and you need to put effort into both of them. And as a very early stage company, and speaking as a company now that's come through 3 significant fundraising rounds, you just have to get better and better. And really where it starts, I think, is with the people. The people that you have on your board are absolutely critical, and we've put a lot of effort into having the strongest, most diverse, most locally knowledgeable board that we can. The investors that you build up in your history who are credible, reputable, and locally knowledgeable again, who can, as Yemi was saying, give that level of recommendation, I think is extremely important. And just being prepared, trying to understand the way that investors think, the language they speak, and making sure that you are continually in a state of fundraising and ready to have the conversation.
Yeah. I mean, speaking of people on your board, I think Copier got an ex-Amazon director to join the team. So such valuable experience comes in handy.
Yeah, I mean, Amazon obviously is a great shining example of success to all of us, and the principles with which they operated the business that Jason Lombard, our recently appointed board director, Jason Murray rather, brings to us is inestimable, really. He's the knowledge and learnings that we can get from him allow us to sort of make great leap forwards very, very quickly.
Isis, and I'll ask this question with one of the questions that has come through, and it reads, what other digital services and tech-enabled solutions does Africa need, like remote healthcare, etc., and expand that just to where is the Africa tech space going? What opportunities and what is in the future for the tech space?
I mean, it's definitely a really exciting point in time. I mean, similarly, I've been working in the space my whole career and never kind of been things you kind of dreamed of are like happening now. I think looking ahead, there's certainly, I think, a lot more just volume of companies being founded, different types of people coming in to found companies, a lot of activity outside of the big 4 markets, so the big 4 being Nigeria, Kenya, South Africa, and Egypt, other markets on the continent. And so, yeah, certainly, just the question here was actually specifically about healthcare, but in Kenya, we're certainly seeing a lot of healthcare startups getting funded, just different types of services in the health tech space as well as education. But also looking forward, I think I'm definitely seeing more growth in local investors. So in terms of the early stage, angel, pre-seed, a lot of activity there, as well as increased interest and activity around local corporate venture as well into this space. So I think that's going to be quite interesting and something that hasn't been necessarily as active. But,
yeah, I mean, yeah, I think that conversation is very. Now we're always having it about having local investors in local startups, and partly because it also solves one problem, and I think Yemi, you've talked about this before, and one of the challenges is currency issues that you have when you're investing in some of the African countries. But in addition to currency, and maybe you can speak about it, what else do you see to be also a challenge, stroke opportunity?
So currency, of course, is a challenge, given what we've seen in many countries. One of the ways to try to, well, there's several ways to address it. I mean, we look for businesses that operate across multiple African countries as a way to diversify risk from a currency perspective. The ideal situation would be to have a business that has local currency costs and hard currency revenue. That's the holy grail, and we've been able to find one or two of those. But beyond that, you just have to be able to outgrow the currency issues, which is one of the reasons why a lot of the interest we're seeing in Africa is really, so to the point Isis was making earlier around female founders and where they tend to be focused and where the money is going. The reality is most of the money is going into tech because these are hyper-growth businesses. If I have a business that's growing 50, 100% a year, am I concerned that the currency is going down 7, 10%? No, not really, at the end of the day. But if I'm investing in a business where I'm underwriting to a 25% growth, well, 10% currency depreciation really eats into my returns. So the focus then naturally has been on hyper-growth businesses. So that's the other way to try to address it. But there are a lot of different lenses to look at it, because the other point here is that almost all of the private equity, broadly defined, including VC capital on the continent, is in US dollars. So fundamentally, there's a currency mismatch, because if we had local pension funds investing in local fund managers in local currency, then you wouldn't care. Right? Like nobody in the US worries about currency mismatch because there's no mismatch in the currency. So that's a different point around where the money is coming from. But just fundamentally, those are the ways we try to address the problem.
Unfortunately, we have come to our time has run out, but we have so many other things we could have talked about for hours. And with that, I'll just say thank you for listening attentively, and thank you for the panelists for those very insightful comments. Thank you.
Thank you.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
Please welcome Parliamentary Under-Secretary of State, Minister for Africa, Latin America and Caribbean, Vicky Ford.
Ladies and gentlemen, thank you, and a big thank you to Bloomberg for giving me this opportunity to speak about the government's work to grow trade between the UK and Africa. And through this, to help grow African economies, create jobs, create opportunities, both in African countries and here in the UK. Over the past 7 and a bit months since I've been Minister for Africa, I've had the chance to visit 13 different African countries, to meet UK businesses that are already busy there and others who aspire to be. I've seen firsthand some of the investments that UK organisations have made and the impact that this is having. I've also spoken to many different officials, ministers, prime ministers, even presidents about their priorities and hopes for the future. Every country is different. And yes, there are often challenges and barriers, but there are also opportunities. Our task has been made even harder by Putin's illegal and barbaric war in Ukraine. Since the invasion, so many African voices have spoken to me about their concerns. It's sent commodity prices soaring across Africa as elsewhere, and this is impacting on household budgets, on the cost of food production, and on humanitarian operations. So the UK has not only stood by Ukraine, but we've also stood with the world's poorest. And as one of the World Bank's largest shareholders, we've helped to put together an unprecedented package of $170 billion to help the world's poorest countries cope with these rising prices. Ahead of the conversation I'm going to have with Akshat, I wanted to give you an overview of 3 areas of work: facilitating trade, supporting business, and making sure that we continue to address and mitigate the impact of climate change. The starting point for trade facilitation is a trade agreement, and the UK has 18 trade agreements in place with African countries, providing preferential market access to 51 African nations. Later this year, my colleagues in DIT will launch our new preferential trading scheme for developing countries, which will be more generous and simpler to understand. And we're also supporting trade between African countries. In March, we announced a programme of up to £35 million to support and facilitate the African Continental Free Trade Agreement, which is working to remove trade barriers between over 1.3 billion people across 54 African countries. During my trip to Kenya in January, I saw how our investment of £75 million has eased trade by improving the capacity and efficiency of the Kenyan Ports Authority. Back in 2011, the turnaround time at Mombasa Port was 12 days. Then the investment has happened, and now it is just 3.5 days. That allows more goods to move in and out of the continent and reduces the costs of trade. In January, I launched the Growth Gateway Business Support Service. This has already helped more than 100 African and UK businesses to trade and invest. When it comes to British trade with African countries, UK businesses are already among the top investors in Africa, investing more than £50 billion in 2019. But many businesses don't need UK government support, but some do. And therefore, the UK government is currently supporting more than £2.5 billion of private sector investment into the continent. That figure is set to grow following the launch of British International Investment, which is our revamped development finance arm. In February, BII committed to invest $50 million into agribusinesses in Africa through AgDevco. And when I visited Tanzania last month, I saw how our investment has helped to grow avocado production and exports. That's not only helped a large UK producer, but it's also assisted around 2,000 local smallholder farmers. The UK is also supporting cutting-edge industries and technologies. In February in Nigeria, I saw how the DigiGirls project that we support was giving female entrepreneurs and small business owners the digital skills that they need to succeed. Our tech hubs in Nigeria, Kenya, and South Africa have also supported numerous startups to grow their businesses and do good for their communities. At the UK-Nigeria Economic Dialogue last month, I heard about the growing interest among many Nigerian tech companies to expand their connections with UK-based businesses, especially when it comes to using tech to solve societal dilemmas and boost development. The UK government also played an important role in the creation and launch of M-Pesa, which is Africa's most successful mobile phone-based money transfer and microfinancing services. It has helped revolutionise access to finance. It's trebled financial inclusion. And M-Pesa now hosts transactions worth over half of Kenya's GDP. One of the greatest threats to Africa, though, is climate change. And that is why tackling climate change is a major strand of our work with African countries and institutions. We used our presidency of COP26 to launch the Just Energy Transition Partnership with South Africa. It's a really ambitious $8.5 billion program to accelerate a fair and inclusive transition to a low-carbon future. South Africa has now established a permanent task team under Daniel Maneli to deliver the Just Energy Transition Programme, and an investment plan, including a programme of priority projects, is being prepared. Alok Sharma, the COP president, will be visiting shortly. And we're also contributing £200 million to the $1.5 billion programme to preserve the Congo Basin forest. Delivering these commitments is a top priority for the remainder of our COP presidency, and we're also working closely with partners as we hand Egypt the baton when they become COP27 presidents. Next week, I'll be in Accra for discussion at the annual meeting of the African Development Bank. This is to support the transition to cleaner, greener, and ultimately more prosperous development. We've been working with the bank on the Room to Run guarantee agreement. The guarantee will unlock up to $2 billion of additional climate finance for countries across Africa, with a focus on supporting adaptation and mitigation projects. But climate change is also a huge opportunity for many UK companies. In Niger, for example, a UK company is exploring the feasibility for a huge wind farm. That would be a big step forward for the country's clean energy transformation. So just to summarise, excuse me, the UK is committed to building long-term sustainable partnerships with African countries. We want to support a freer, healthier, more prosperous and resilient continent. And we'll be working on these partnerships to remove barriers to trade and investment, to support UK companies seeking to invest in Africa, to increase trade between African countries, and to help shield African countries from the worst impacts of climate change. Thank you.
Please welcome Bloomberg's Akshat Rathi.
Thank you for those remarks. I mean, they touch all aspects, but let's start on climate. You mentioned that COP26 presidency is still held by the UK and will be handing over the baton to COP27. Now, one of the things that could not happen at COP26 in Glasgow was the discussion around loss and damage. This is to do with when climate impacts happen, especially extreme weather events where countries have to tackle the immediate impact of, say, a hurricane or a flash flood. They would like compensation from developed countries, which is part of the Paris Climate Agreement. How is the UK government thinking about those discussions that are going to happen in Egypt in November?
So first of all, can I just start talking about what happened last November? Because I think that it was incredibly important that countries from all across the world came together to make those promises, and they were their promises of how they were going to work towards reducing carbon. Now, the UK, as president of COP, feels a really important role, and I've discussed this with Alok Sharma, a really important role to encourage those countries who've all made these really important promises to actually deliver on them, okay? And we need to be seen to deliver on themselves. So I'm going to leave aside the mitigation, you know, the question you've just had, because that will be very much what Alok will be working with Egypt on. But also what I've been focusing on is trying to make sure that the promises that we made are also delivered.
Right.
Okay. And so, for example, last week, when we had the COP conference in Côte d'Ivoire on desertification, I was very much saying this is what the UK is doing to see through on our promises and therefore encourage others as well. But yes, you are right. There's huge issues that we have when you see the really adverse impacts. So, for example, I've been in Malawi where I've met young girls whose schools have been washed away by the flood. I've met just tragedy of the drought in Somalia. So one of the things that we as the UK are doing is through our international development strategy, we are increasing back up the amount of money that we spend on humanitarian aid. And that's meant that we've been able to put, for example, more funding into helping the situation in Somalia and those adverse impacts.
And that is, of course, maintaining the level of total funding that's going towards foreign aid. So that was dropped from 0.7% to 0.5%. Yeah. You're saying it'll be shifted towards humanitarian efforts more. So there'll be some cuts happening somewhere else to manage.
So one of the really difficult decisions we had to make during the pandemic, because the pandemic, you know, had such a massive impact on government spending, government budgets, is we had to make a really difficult decision about how we were going to try to restore public finances in the UK. So the decision was made to reduce ODA from 0.7 to 0.5. We've been looking again at how that 0.5 is spent. We announced the new international development strategy yesterday. the Foreign Secretary absolutely passionate that we need to restore back up to the pre-reduction levels what we were investing in humanitarian aid, but also what we were investing in women and girls. The UK is a massive supporter of women and girls across the world. Will never enable countries to get the best performance and economic growth if we don't invest in 50% of the world's population. So this is why girls' education is so key.
Right. And then in terms of investments that are, again, committed to and are being made, there's the massive $8.5 billion deal with South Africa to help it move away from coal. Now, that deal is absolutely key, not just for South Africa, which is 35% unemployment, but if it happens successfully, those could be replicated in other places that are dependent on coal. Now, there are discussions happening in South Africa about what projects to fund. You know, the funders, including the UK, are very clear that they should try and move away from coal. How are those discussions going, and will we see sort of the details of the deal by COP27, do you think?
Yes, so it is such an important project, the just energy transition, and it's got to be an energy transition, but it's also got to be done in a just way, you know, as you point out. Lots of challenges in South Africa with employment levels, for example. So the UK is the largest funder, often through guarantees that we've put up. Current status, as I mentioned in my opening remarks, is that the South Africans have now arranged the sort of task group of people who will be leading this, and they are working on putting together their project program. So I'm hoping that we will see that in the next coming months, and definitely before we get to Egypt, and that will then give investors the oversight of what types of projects they can invest in, so we can not only we can use that $8.5 billion and also bring in other investors alongside.
So now we are having these discussions which are quite important about cutting emissions, about moving away from coal, at a moment here in Europe where we are having to rely more on coal, if we can, in places that still have coal power plants left, or having to figure out where we can get access to gas from, because we want to try and reduce imports of gas from Russia. African countries have much wealth in fossil fuels, which they would look at what's happening in Europe and say, why can't we use more of it? So how do you ensure that that is something that they will not tap into, that they can keep in the ground, because there are cleaner, better, cheaper alternatives that they can get access to?
So I think, we've seen this awful illegal invasion of Ukraine. It has had this massive impact on fuel prices across the world. It's really hitting the world's poorest. But it's also reminded us of the need for energy security, okay? And in the UK, that's actually reminded us that actually we need to work towards having more renewables, more new nuclear, as quickly as possible. Okay, and I think the same goes for countries all across the world. Obviously, to get to that energy transition, you sometimes use gas as a transition fuel, but actually we should be accelerating our focus on getting those cleaner, greener energy sources out there as well. We've just seen in the film that we just watched, the devastating environmental impact in Nigeria of fuel theft, illegal fossil fuel extraction. It's one of the reasons why, when I meet the Nigerians, I've not only spoken to them recently about how can they tackle that better, but actually also how can they move on with some of the plans to increase, for example, solar contracts, to diversify. And that, I think, is really, really important. We should be working to diversify those energy systems.
And what specific clean energy projects do you think are sort of highlights that you would say could be replicated in other countries that the UK has been involved in?
So I loved going and seeing the Malindi solar plant in Kenya. It's the East Africa's largest solar production plant. That went online in January, and there's room to expand that as well. It is complex. I don't underestimate that. You need investment in grids as well, which is another thing that we will be looking at But actually, those sorts of projects we'd love to see replicated in other parts of the world. I mentioned also the one in Niger. They're doing trial work on that massive wind farm there, very windy country, that desperately needs electricity.
Now, you mentioned renewables, and obviously that is now pretty much clear to everybody as the cheapest source of electricity that you can get and key to grow. But the UK is also looking at new nuclear here domestically because it allows you to have electricity that is constant available whenever you want it. Would one of the things that the UK would look to do is help other countries get nuclear after doing?
So obviously, countries will make their own decisions about what they want to do with regards to that. But one of the things that we have in the international development strategy is a strategy to have centres of expertise for different. So one of it will be green transformation, so that countries can come to the UK and ask for our advice, how have we seen things, and get that expert advice as well.
Right. And in terms of the sort of, the time that you spend on this portfolio will be limited. What are the things that you would want people to remember for what you've done in your role as minister for, and this is not just Africa, you're also a part of your portfolio, covers Latin America, covers the Caribbean.
So, well, first of all, as a woman minister, I am incredibly proud to be serving a woman foreign secretary. It's only the second time in the world, in our country's history, that we've had a woman foreign secretary. So many times in the past few months of having this job, I've seen how women often bear the brunt of what are very challenging circumstances. So I'm very proud of what the UK has done over recent years in investing in girls' education. That is something I would like to be proud of. We'll be hosting a conference later on this year on the awful impact of sexual violence in war. Ukraine's reminded us of how terrible it is when rape is used as a weapon of war, but actually it's something that I've also heard of from reports in Tigray and Ethiopia. So being able to shift the dial on that, the Foreign Secretary is very clear that she thinks that the use of rape in a war should be considered as much of a red line as using chemical weapons, for example. So that will be, a key thing we'll be working on. Delivering on some of these climate change projects. I'm so proud to have played that little part in the COP conference last November, but we now need to deliver on that. So keeping the focus on that. And also, my background before getting involved in politics was as an infrastructure banker. I've seen how infrastructure really can help change the future for a country. So getting a few more of those infrastructure projects up and running in an honest, reliable, transparent way for the country that's taking our money, so they know, they know what they're signing up to. I'd love to see some of that. But it's a long-term goal, but it's going to be good.
Thank you. Thank you very much for your time.
Please welcome Noah Moyo, Group CEO, Distributed Power Africa, Peter Ben-Herniko, co-founder Mandulis, and Bloomberg's Malika Kapoor. Peter, Norman, welcome. Thanks for being with us. Now, you both have the same goal, really, which is to light up parts of Africa that don't have access to power, and there are many swathes of the continent that still remain in darkness. So you are both doing your bit to power up Africa, but doing it slightly differently. You are focusing on rural areas and sort of small-scale industries, mainly residential homes. You said it very well, you're focusing on the forgotten middle, on industries and commercial entities. And the form you're doing is different. Peter, you're using biogas, right? Can you explain to us very briefly how that works and what you're doing?
Awesome, thank you very much. So we basically get agricultural waste that no one needs, and that's usually burnt. So rice husks, maize cobs, groundnut shells, coffee husks, we convert that into methane and hydrogen, which then goes into an engine and runs it, and that generates electricity. And that, in a village of maybe 1,000 homes, that can deliver between 0.5 megawatt to 2 megawatts of electricity, which covers all the needs of such a village. And if such a village is, for example, miles and miles away from the grid, it becomes significantly cheaper to develop that mini-grid to industrial scale than to connect that village to the grid. So that's what we do. We deliver electricity that's affordable, grid quality at the same price as the grid. And we do that in Uganda at the moment.
In Uganda at the moment, right. Norman, tell me about you. You mainly focus on solar energy, is that right?
Yes, Malik. It's basically, we like to call it distributed energy or decentralized energy, targeting really, as you put it rightly, the forgotten middle. And I call it the forgotten middle because there's a lot of heat at the IPP level, which is at the utility stage, and not necessarily a lot of light at the moment, but there's a lot of heat. Then there is work that he does more in the rural part. But what drives the economies of Africa is the commercial and industrial players, the data centers, the big businesses, whether it's your commercial, whether it's your industries, the mines, the private schools. That, unfortunately, has started to suffer significantly in the continent because there is no more energy security. The grid is weak, wobbly, and struggling. And so most of these players are beginning to fire up the generator, and probably it's the most expensive way to try to run your business using a generator.
Right.
And yet, they've got a massive real estate on top of their roof. Some have got a massive car park, which is idle and dumb. And our view of the world is, let me show up, let me put panels on top of your roof, let me utilize your car park.
Yes.
If you've got a mine, you've got a massive real estate, then you've got this massive reactor in the sun, called the sun in Africa, and we can generate anything up to 10 megawatt, 20 megawatt, and we can power the actual company. You can also put storage solutions now, whether it's Tesla, even Tesla is available, whether it's you put a wind farm or a mini hydro or wind, but you can literally allow every entity in Africa today to generate its own power and possibly even sell some of it to the grid. So it's a different mindset.
And how does the costing compare to that from the grid?
As you know, to date, solar is probably the cheapest source of energy, much cheaper than the grid. If I was to throw in numbers, solar per kilowatt hour can range anything around 7 cents right now if you're building a decent enough plant size. Your typical grid in Africa, the correct pricing should be in the 13 to 15 US cents, correct price. I say so because there's a lot of subsidy, which has also created problems. Your typical generator is anywhere in the 24 US cents per kilowatt hour.
Much more expensive,
so
of course.
Solar has to be our default go-to technology to resolve the energy crisis in Africa.
Peter, you also work on mini-grids. So you have sort of two businesses. One is the biogas part, but you also have co-founded Modularity Grid. Tell us a little bit about the work you do there. So you are basically providing the technology to make mini-grids more efficient.
Indeed, indeed. We were actually quite grateful for the work of the UK government in places like Africa through Innovate UK. So Mandalus and Modularity Grid, working together with Imperial College, actually did the industrial research and development of the digital mini-grid systems that we are now scaling up. And what happens there is, you have a portfolio of mini-grids, and by working on the digital technologies that connect them all together, you're able to work with, tens of thousands of sources of biomass feedstock to feed those mini-grids in terms of waste to energy, but also manage the distribution of that electricity to the households in a particular mini-grid. And working on it, linking both the hardware and the software parts together makes it, very, very interesting and a lot more modern than what you would expect to find anywhere in the world.
When we were chatting yesterday, you came up with a very interesting analogy about the aeroplane and how that's almost the same thing as a mini African village. I'd love you to tell our audience what you mean by that.
Awesome, because think about this. I flew here on an Airbus A380. My background is aerospace engineering. And you find easily, a few hundred seats. Each seat's got phone charging, it's got a television screen, and that's the same amount of electricity that you'll probably have used by a rural village home. So when you have a village of about 500 homes and a mini-grid that connects them up together, that's the same amount of electricity that you probably have being used in an Airbus A380 or A350 or something like that. So it kind of brings it home for me personally.
Yes.
It means if it can work in a rural village, if the technology we develop in rural villages with regards to remote monitoring of battery systems and having 24-hour-a-day electricity at the lowest cost, that technology can actually be brought back to Europe and to the UK and used out here to bring down the cost of energy as well.
Yeah, I thought that was a really interesting analogy. Norman, so who are your clients? Who are these people who are saying, yes, come and put the solar panels on my roof?
I think as a start, we had to be pragmatic. My background and our background is a group. We're part of the Econet group, or today called Cassava Technologies. So we come from the telecom space. 20 years ago, we had this crisis where you had a monopoly called a fixed line operator trying to find their way to make telecommunication available. And it took 20 years to figure it out eventually, but we ended up recreating and rewriting the African continent in terms of telecoms and penetration of telecoms. But we learned something from there, and one of the key things we learned is you need to focus on what we call the buffaloes versus the rabbits. The buffaloes that really can feed in Africa when you want to feed a family and you're hunting, and there's a limping buffalo and there's a rabbit. You don't spend energy chasing the rabbit, you bring the buffalo first. Then you can start chasing the rabbit thereafter.
Yeah.
So we were very deliberate and says there is the top 500 corporates in Africa. That's our sweet spot. If I mention the name, you know them. Whether it's Unilever, Coca-Cola, whether it's private schools, whether it's clinics.
The big guys.
The big guys. The second piece is the data centers and the telecom switching centers. Then you've got telecom towers in Africa. Those are probably the key customers who can sign a 10 to 20-year commitment that they'll buy power from us. It's a power lease agreement or a power purchase agreement. And they're investment grade. And those are the ones that we are starting with. I think eventually we will converge with what he's working on and what the grid is trying to do. And eventually we would have solved this crisis in Africa.
There's a great question that's come in from the audience, and this one is for you, Norman, in particular. Solar panels can't replace the grid, though, right? Especially when there are clouds, rain, and in the evenings, right? So can you elaborate on the storage solutions, and how much does that add to the cost of solar power?
So I think I'll throw the figures out there. Storage is a very interesting conversation, albeit very futuristic. It's changing, particularly the lithium battery technology. The price is coming down a little bit slower than we prefer because the demand is high. Not only do we need storage lithium battery to power homes and businesses, we are also using it to power electric vehicles right now. So the demand is high. But if you start to see the crisis in energy right now, the increase in price of diesel, and every corporate in Africa having to fire up a generator, the conversation is becoming realistic that I can combine my solar to my battery and I can actually deploy a solution. In one of our markets, we rolled out 500 Tesla Powerwalls in a very rural parts of Africa, but mostly to power telecom towers. And I could report today that I think after 2.5 years, we've had zero theft of those Powerwalls. Don't tell anyone about it, of course. You might excite them.
It's just a secret.
It's a secret,
just amongst us.
Yeah, but I think the technology is coming of age. The pricing is getting there. Unfortunately, for storage, the price is increasing. We're now beginning to look at biomass as an alternative way to also start to complement.
Yeah.
But we have to look at technologies that are of what we call tier 1 technologies. That's what you need if you're going to sign a 15-year lease.
Well, you have the right person to talk to, of course. Peter, storage, that's a really good point, you know. And, I mean, mini grids have their own challenges as well. I'm curious, you know, how hard is it to really understand how much energy is required by a household, by an individual household in a village? How do you gauge that? And what do you do with the surplus energy that's created? How
Awesome.
do you store that?
Thank you very much. So our mini grids work with biomass covering the base load and solar coming in to cover the peaks at daytime. And our average mini grid size is, as I said, at least 0.5 megawatt and up to 2 megawatts in Uganda. That's the range you're allowed to build a mini grid to. What that means is the households, about 1,000 of them or so in a mini grid, will not use much electricity by day because most people are in the fields harvesting and planting and so on. But you have all the mills running by day. And so our main storage is actually dry storage of the actual biomass waste itself. And what happens is most of the electricity is used for agriculture value addition because the big corporates out there, in terms of breweries, in terms of other food industries, global ones, have their supply chains in these villages, and they need those products, pre-processed to the right quality standards, dry, clean, etc. And so the electricity that we generate and that we deliver at that low cost enables industries to set up branches in these rural areas, enabling these communities to actually feed into the global marketplace. And that allows us to run, around the clock with all the electricity actually being used around the clock, even though the communities will only use the electricity in their homes in the evenings when they get back home. We can still keep everything running around the clock. Electric vehicles have come in handy, obviously, because the price of diesel and petrol has shot up in most of these areas. So we do have EVs moving around, moving farmers' crops from A to B, electric ambulances and so on and so forth, and some battery storage as a buffer. Because when you have your buffer where you've got your biomass and your solar going into that buffer, you can guarantee a uniform quality of electricity around the clock. That buffer may only be, 1 hour of a buffer, but it delivers better quality than the grid. So we've even had now, shopping malls moving from the nearby towns to the rural areas so that they can keep their fridges on 24 hours a day. So it is quite exciting from that point of view, and it's leading us now to, from our current 3 locations to developing 26 now across Uganda, and we're launching the first 10 that have been funded this year, next year, and fundraising for the next 16.
I want to talk to you quickly about payments.
Yep.
There seems to be a lot of innovation in the startup space with people coming up with innovative solutions to power up Africa, such as yourself. But the bottleneck seems to be in payments. How do you get your customers, which in many cases are rural farmers, people who work in the fields? What's your payment model, and how do you ensure that they don't default on their payments?
That's why we go for biomass, because our payment model is linked to the rural farmers actually.
How so?
Being in agriculture. We purchase agricultural waste. They get an income from that. But secondly, when they have access to low-cost electricity, at grid price or below for ag processing, they're able to multiply their income even further because the big firms will buy their grain at triple the price if it's at the right quality standard. So by us linking them to us, that way we know that they will have an income. But then in terms of how they pay us, cashless, prepayment systems. We've got prepaid meters in each home, in each business, and they buy the units of kilowatt hours they need to use, and every customer replaces that whenever they do need it. But also, we've also decided to bring in all the mothers in the community as part of that. So we've deployed gasified cook stoves in these homes. Some of the excess electricity that we do produce goes into producing biomass pellets to replace firewood in their homes. And when they've cooked with our biomass pellets in these gasified cook stoves, they are left with a biochar, which we actually sell to the cement industry.
So you're trying to keep it quite circular.
Full circular economy,
yeah.
Making sure as much money as possible from the corporates goes to their suppliers in these rural communities, and then the issues start reducing as we go along.
I know we're almost out of time, but I'm going to push my luck and come to you with one more question. I'm just really curious about solar panels. I want to talk to you about the supply chain disruption that we've seen. Now, I know a lot of the solar panels are imported and they come from mainly China. Hasn't that pushed up the cost of importing solar panels? Has that gone up as a result of supply chain, the supply chains being broken? And is it time for Africa to consider manufacturing solar panels? Is that even an option?
Yeah, I think both the COVID crisis and certainly the Ukraine crisis has seen the price start to skyrocket a bit. But solar prices went down in the past 7 years by almost 85 to 90%. So
Wow.
yeah, we're catching up a little bit, but it's not that significant. Is there an opportunity to start to locally manufacture solar? It's been tried. It's a nice, fancy idea. But solar, you need critical mass. You need the economies of scale to do so. However, there is a huge opportunity to assembly, particularly batteries, storage, because they are by nature very heavy.
Yes.
And they take long to come to the ground. So I think there is an opportunity there. But as for solar panels, I think China continues to be the player, the manufacturer of the world, and will probably be there for a while because they have got what we call the Bloomberg Tier 1 suppliers. And the financiers look at that, the quality of the deployments and the quality of the panels.
You know, you talked about batteries. Great question. The material resource for batteries are in Africa. How do we move forward the conversation about bringing the manufacturing of lithium batteries to Africa to reduce the total cost of ownership?
Yeah, I think the most beautiful part is I said, if I was a millionaire, the one business I would like to put in right now in Africa is in energy. Why? Because everything else works on top of that energy. Everything that we heard from Minister Sina, the digital world in Africa, the telecoms, the fiber, everything in Africa needs a stable power system. I'm based in Johannesburg, and we're suffering from 2-hour, 4-hour load shedding right now in probably one of Africa's biggest economies. You cannot afford even a 10-minute blackout, let alone a 4-hour blackout. So there is a huge opportunity to start to invest in assembling of lithium batteries. And we've seen a few entrepreneurial startups, and they're doing exceptionally well. So I think to the financing world out there, the biggest way to impact the climate in Africa is to start to allow storage. We've got enough sun, so you don't need to worry about that. We also got a lot of land, but we need storage.
Yes, storage is absolutely key. I could go on, but we are out of time, and we have many more interesting panels to get to. But they will be here at lunch, my guests, and we'll have that facilitated networking where we can talk about green energy. So do come and find us, and we'll continue the conversation there. Peter, Norman, thank you so much for joining us.
Thank you very much. Thank you.
Please welcome Maher Jarmakani, Chairman and CEO, Niger Dock, and Sergio Pimenta, Regional Vice President, IFC, and Bloomberg's Jennifer Zabasaja.
So we're supposed to.
Hey guys, how are you?
Morning.
Good morning. Thanks so much for being here. This is really an important topic, infrastructure. Maher, you were talking a little bit about it last night at the dinner. And I think just when we look at, I want to start off with a Twitter poll because we love Twitter polls here at Bloomberg. And specifically when we asked our Twitter audience what the priority in Africa needs to be, infrastructure was at the top. So it just shows just how important it is. Sergio, I wanted to start with you because IFC, of course, infrastructure and the importance of infrastructure is key to your business. Can you talk about what exactly you're focusing on with the IFC and growing infrastructure and the gaps that we're seeing in infrastructure across the continent right now?
Sure, Jennifer, and good morning. And you're absolutely right. The Twitter poll does show that infrastructure is extremely important, and it's particularly important in Africa, where there's still significant gaps when you look at it in terms of what is needed to be done. I mean, I think we made some estimates that by 2030, the continent needs investments of about 150 billion a year to get to cover the gap that is still there. And right now, the level of investment is about half of it. So what are we focusing on? Infrastructure has several main components. I think the first one we're focusing on is energy. Energy is one of the areas, I mean, we heard it in the previous panel, that is extremely important in Africa. When you look at the growth of the population, the number of people who are not connected to it or not have access to energy is actually growing, estimated at about 600 million people on the continent. So there's really a need to do something there. 2/3 of the people in the world that don't have access to energy are in Africa. So we have been very focused on that sector. We've invested on the IFC side about $3 billion over the last decade in energy. And we've been, of course, focusing first and foremost on renewable energy. This is the future of energy, and that's something that we've really been focusing on. But we're also looking at innovation in energy and looking at different models like mini-grids and off-grids and different systems. We just launched, for instance, in DRC, our program called Mini-Grid, Scaling Mini-Grid, which is taking a simple formula of bringing in private sector, working with the government, setting up a replicable model that we can take to one secondary city and then replicate to another one and another one and another one. And we launched this in November, and we're very excited to see that this program should work, and then we can, of course, replicate it also in other countries over the continent.
Where are you seeing it working particularly well?
So it's particularly suited. Mini grids called mini, but in reality, as you know, it's actually pretty sizable grids in secondary cities that can serve several millions of people. So it's particularly suitable for countries with large geography and where populations are spread. So DRC, obvious candidate, but also the Sahel. We've been looking at developing these programs in other countries like Chad. Any country where population is quite spread, it's quite important. I think we estimated about 30% of the population in Africa that doesn't have access to energy today could be served through this type of structure. So it's something that's very important. So that's one. The other part that is also very important in what we're focusing on is digitalization and infrastructure. I mean, it was not the first one on the poll, but there is a component of infrastructure behind it that we are supporting. And particularly with what happened with the pandemic, we have been really seeing an acceleration of the digitalization in Africa. And we have also identified that there's still significant gaps on the infrastructure side of it. So we have been investing just in 1 year, we put $1 billion in that sector last year, and we're putting almost another $1 billion this year on shared infrastructure, whether it's cables, whether it's towers for mobiles and so on, really trying to push that part of the agenda. And of course, transport infrastructure, I don't want to talk about it before my hair does, but it is a very important sector for us. And it's also very important because when you look at the evolution of the economy in Africa and you see the development of regional value chains and the importance of having a continent that is connected, all the transport infrastructure is extremely important there.
And Maher, we were talking a little bit about this a few days ago specifically. When it comes to, I mean, Sergio outlined this very well for us, the money is there, right? I mean, the investing is going to a lot of these projects. We see that in this chart right here. There's a lot of investment into some of these projects, but the projects are not getting done in most cases. So what's happening in between? I mean, as a private operator, what is it that you're noticing the gaps in?
I think most of the money that is out there is trying to find its way to projects through governments and public sector, when actually a lot of the major projects that are underway are public-private sector or even private sector projects. And private sector bring in a whole different approach to raising funding. What we've had experience in is that challenges around stability and stable power sources, connectivity, pose a big challenge for investors trying to bring funds into the country. And the private sector need to work with the public sector in trying to resolve these kind of challenges. The funds that are coming into Africa are usually looking for very clear guarantees. They are patient capital, but trying to find the right projects that they get to, which are mainly now being driven by private sector development, whether it is in the ports, whether it's in the ICT sector or the transport sector. These are posing challenges where we found in our case, working in Nigeria, we've worked on a number of projects in the ICT sector. We've developed a data center where we've had to raise funding from a mix of Exim banks and private equity. And this kind of funding has its own challenges that are quite different than the challenges that, let's say, you get from the public sector and working with governments. I think that if we are able to bridge some of the reliability issues that are found in terms of power, logistics, matching the seaports with the infrastructure that goes hinterland, it can unlock a lot of more potential.
How do we get there?
I think working closely with governments, trying to make them understand that improving the ease of doing business and where the challenges, the perceived risk that financiers find entering into African markets is a very important step. The issues around connectivity across the continent is a very important part of moving goods. And reaching the population is a big factor in unlocking the potential of the continent.
And Sergio, just on that note that Maher was just making, a lot of it too is contingent on the government that is in power, right? And if they are supporting some of these projects. And so how are you with IFC sort of navigating that and, you know, finding the right projects to support and take to the public sector to then back?
So Jennifer, I think the point there, which is quite important, is that when we look at how we can support infrastructure in Africa, a lot of financiers, and you said it, there's funds available, and there's a lot of financiers who are looking for long-term funding, long-term opportunities to put their funding. And I think the major problem is that it's very hard to find what banks call bankable projects, right? So there's no project that are completely finalized and that you can say, okay, we'll go and we'll do that. And then the second point is I think exactly what Maher was saying, which is, you know, governments in Africa, like not just in Africa, in many other continents, they have limitations on their fiscal space. And given the needs of the populations to develop infrastructure, you do need private sector capital to come into these projects. So what the approach we took at IFC, we realized this a few years ago when we were looking at, you know, we had a small investment portfolio in infrastructure in Africa. And we were asking ourselves, why are we not doing more? So, well, actually, we are probably financing about 70 to 80% of the projects out there. So why is it so small? How do we grow this? How do we grow this space? So that's an approach we took about 3-4 years ago of creating ourselves as much as we can. And being IFC being the private sector arm of the World Bank Group, working with the World Bank, working with other development partners, working with governments, working with private sector, how do we create a space where there's more projects? So what that means is that when we look at a development need, there's a need for energy, there's a need for digital infrastructure, there's a need for a new port or an expanded port. We go and we engage with partners. We say, okay, what's happening? How can we help? How can we create the space? And it's regulatory work, it's working with the governments in terms of finding the right structure, private-public partnership, helping structure that, and then go to investors and say, look, there is an opportunity. Have you looked, I mean, I was sorry to come back to my mini grids in DRC, but it's an important one. How many investors are looking at mini grids in DRC? Now that we're doing all the work with the governments, with the municipalities on finding the right background where investors can come, now we're going and knocking a door saying, come and you know, bid for this type of projects. So it's really about, I mean, our motto now is, you know, creating markets, creating opportunities. It's creating markets and infrastructure.
Maher, do you see a benefit to maybe starting small versus, you know, tackling a lot of these infrastructure problems on a grand scale with governments? I mean, how do you as a private operator sort of approach this?
No, definitely. It's much more advantageous to break it down to smaller blocks because you manage the risk better and you can get much more private sector involvement. Companies that are focused on certain areas, whether it is in the ICT sector, the seaport sector, roads, bridges, can focus on areas that they are knowledgeable in and can bring the requisite finance into that specific area. I mean, some of the examples that we've worked on, we're currently developing a seaport and free zone in Lagos, and we're having to go to a mix of financiers. And we've broken it down into climate funds, focusing on power and renewable energy. We're focusing on private deals to develop the seaport. And we're also focusing on our banks to develop the main infrastructure of the port. So we've broken it down into blocks, and it makes it much easier to approach it. Not easy, but easier.
How much do you have to engage the government then in those discussions?
Certainly, you need all the fiscal support. You need consistent policies. You need to have them engaged in certain areas where their agencies are responsible. So if you're working in the maritime sector, you have to ensure that the National Ports Authority is supporting you. You're working to develop a power project, you have to ensure that the power sector is supporting it. Especially if you develop more power than you need, then you need to be able to feed it back into the grid. And that takes the right permitting to be able to do that.
But there are not consistent policies, correct? I mean, how do you get around that at this point in time?
Well, the policies are consistent across administrations. It's just making sure that from one administration to the other they continue. And where we've managed to have some progress is around economic zones, free zones, which are popping up across the continent. In Nigeria, there's over 30 free zones, and there's more popping up across the West Africa region. And these economic zones, like the one we are developing in Lagos, they give kind of a reliable set of tariffs, levies, land rights, which are very important to investors coming in, to financiers, the guarantees that come with it, and underlying factors that start to increase risk and the ease of doing business. The economic zones actually resolve a lot of those issues. So there is some progress in that space.
And Sergio, I just want to get to this question from our audience for you. So it sort of lends to what we were just talking about. So in most African countries, it's near impossible to fund infrastructure projects without government buy-in, which is what we were talking about, or political nods from the top. How do you address this specifically from an IFC perspective? I mean, how much are you engaging with the public sector?
First, I think it's a very good question, but it's a question that is even beyond Africa. In all countries, infrastructure projects for many subsectors of infrastructure are either delivering a public good or something similar, which therefore requires some form of government involvement. I think what we focus on is really on looking what is the role of the government in these projects, and how does the government deliver what the government needs to deliver in an effective way. And it's a lot around, first, making sure the regulatory environment is appropriate, that there is a bigger plan, and that's a lot of the work we do with our colleagues at the World Bank in terms of like, what should the energy sector be in this country? How should the telecom sector be in this country? And then promote a system where you have better delivery for the public, and therefore looking at more competition so that prices can go down, that quality can go up. And then we have teams that can help governments in terms of building their own capacity to be able to be the counterparty of private sector. It's very important to have regulators that are effective, that can look at how different players from the private sector come in and help deliver the goods. I mean, we look at what we can do. So we have both at the World Bank and IFC, we have teams who do that. We have in particular at IFC, we have teams that do specifically give advice to governments on private-public partnerships. And what these teams do, what we do is that we engage with the government who says, okay, I want to bring in a new operator of telecoms. Let's say we want to bring a second or third license and so on, or we want to build a toll road somewhere. And so how do I do it as a government? So we have teams who can help on the technical side, on the regulatory side, on the financial side, on also very importantly on environment and social issues, right? So if you want to build a new road, are you going to displace people? Are you going to have an impact on the environment, on biodiversity? So we look at all these aspects and we help the government follow what we consider best practice, international best practice on all these dimensions. And then these teams can also help governments then go and do for a bid, and so that private sector can come in and make the best offer, so that you end up having good private sector companies following good standards coming and applying and investing in Africa.
But it's not just the initial project, right, that these governments need to buy into. It's seeing it through, right, which is a lot of the issue that we're seeing. A lot of these projects are just not getting done. So is that where the regulation comes in? Is that sort of what you're alluding to?
So I think it's a combination of you need the regulation, so you need, and a lot of work needs to be done in many countries to make sure that regulations are up to date, particularly when you look at digital infrastructure, which a few generations ago we didn't know what it means, so we need more updated regulations. But then it's a lot around capacity, right? Because if you set up a regulator, you need to have the people who have the competence, and there's a lot of competent people in Africa can do that. It's just a question of making sure that they get selected to the jobs and that they get the opportunity to help their countries that. And this is an area that we can also help.
Is that happening anywhere specifically? Would you say the DRC is an example of that?
So I think it's interesting to see that in DRC, for instance, what we've been doing is working at the municipal level, right? So we've been identifying some of the municipalities where this can happen. And yes, I think it's happening. And you can see it across many other countries in Africa where you see innovative projects in infrastructure that are coming up, whether it's around renewable energies, but also around, I would say, more traditional infrastructure such as roads and airports. We have helped develop good models of private sector management of airports, which is pretty common around the world. And you can see that some of the governments in Africa are embracing that model also and bringing in private sector operators. And then what you see is a shift from sort of a situation where you had something that was not very effective, usually needed subsidies from the government every year, to very profitable operations that contribute, pay taxes to the government, pay revenues to the government, and that's a very good model to follow.
And we're also seeing much more increasingly, and I want to bring up another chart that we have too, specifically when we talk about projects being invested in. China specifically is obviously a very big part of this story. And this chart specifically just shows how much, I don't think it's this one, but we do have one which shows just how many loans China has actually given to the country. Not this one, it's gonna come up in a few minutes, I promise. And for a lot of people, that is a concern, right? Maher, you've worked specifically with Chinese investors. Mm-hmm. Talk about how it's different working with them and sort of why you chose to take in that money as opposed to elsewhere.
Well, we've been in a joint venture with Sinopec, the Chinese national oil company, for over 20 years in Nigeria. They come at Africa with a very different approach to investing. I mean, they're also involved in many different parts of the economy. They're invested in ICT projects, transport projects, power projects. What we found is that culturally, a very different approach to doing deals than, let's say, their European and American counterparts.
How so?
They rely heavily on government guarantees. Their capital is very patient. They have a very long-term outlook, ensuring that they manage their resources very carefully for the future of their country is polarizing sometimes because they take a very China-centric approach. So what we found is culturally doing business with them, you've got to look very carefully at how to protect your interests versus theirs. But that said, the Chinese have an ability to look long-term, to make changes that are appropriate for the business. And the projects that they've been looking at in Africa are all around, mainly around resources and bringing in their technologies and their capabilities into the African continent for long-term sustainability. And that's kind of the different outlook I've seen working between Chinese and other counterparts.
Sergio, is that a concern for you?
What we see in Africa is that there's many different countries, or investors from different countries investing in Africa, and China, as the chart showed very well, is a very significant investor in Africa. I mean, there's 2 points that on the IFC side we look carefully. One is, as the private sector arm of the World Bank Group, we do want to see a bigger participation of private sector in the development of the continent, and it's a necessity because governments don't have the fiscal space to do to invest in everything that is needed in the government. And as Maher was saying, a lot of investments from China are publicly backed or with public guarantees and so on, so having an impact on government finances with a lot of debt and so on, and that's an issue that needs to be managed very carefully. I think the second part that is very important for an institution like IFC is that the projects that we finance and we support meet the best standards in terms of environment and social practice. And it's not always easy, and it is demanding, and I think everybody's looking at how you can move the agenda further to just make sure that we are taking good care of our planet and that we're taking good care of the people on this planet. And I think it's important that every investor coming in, from wherever they come, from whatever part of the world, that they do follow the best practice if possible.
But Maher was just saying, I mean, China is coming in with a China-centric, right, outlook, and so how do you ensure that you as an operator are sort of getting the best deal considering that?
I think the best deal you get is the one you can negotiate, and I think the Chinese are very strong in that sense. They negotiate their deals in a very powerful manner, and I think they're bringing in all the financing that they bring. Governments tend to compromise to ensure that they can bring them on board. But I think China is still catching up because for the last 50 years, many other governments have been investing heavily in Africa, and I think the African governments are much more used to European, American investment, more than Asian investment that's coming in. So I think there is maybe perhaps a resettlement of the amount of investment, a balance between East and West that's coming into the African continent.
Do you think so?
I do. I think so. I think they're still catching up because a lot of the port developments, infrastructure, roads, China has just been coming at that in the last 10 to 15 years. Prior to that, it's a lot of local governments and international investments that have developed those resources.
And when we talk in the short term, Sergio, and this is just another question from our audience here, how does the IFC measure success? I mean, considering all of these projects that are maybe sort of in the pipeline, in development, being funded, I mean, how do you measure what is actually, like, we're heading in the right trajectory?
So we are a development institution. So we are a financial institution. We finance, but we are first and foremost a development institution. So our success, of course, we want to make sure our projects financially succeed, so that companies don't manage to have a decent profit and do well. But we do measure, as a development institution, we measure what we call our impact, right? And we have a pretty rigorous methodology where before making any decision of investment, at the moment we make that decision, we look at what can be our impact, our potential impact of our project, right? And that has several dimensions. There's project dimensions, so what is the project doing? But also there's a market dimension. So we really like projects that can be replicated. We are first somewhere that then others will follow. So we have a scoring mechanism. We have an independent team who does a lot of number crunching and gives us some very clear impact measurements. And then as the project unfolds, we monitor that and we compare versus what we thought ex ante would happen. And that allows us to then measure, say, okay, this project has been highly successful, unsuccessful, or highly unsuccessful. So we have to take risks, and it's important that we be ready to take projects that maybe will not happen. But we go with our eyes wide open and do our best to, from the beginning, set the structure of the project so that it ends up being a success. But and by the way, if I may just add one thing, Jennifer, on this, is that methodology that IFC has developed, being the leading development institution for private sector, I'm very glad that a lot of other DFIs, a lot of other multilaterals and bilateral partners have adopted very similar methodologies based on ours. So it's something that I think can have an impact on the market.
Well, and considering the numbers that you and your team are looking at, where are the scales tipped? Are the projects right now sort of in the highly successful camp right now, or are they still sort of mixed? I mean, give us an outlook.
So happily, our projects are overall successful. That's the good thing. We are, I think, also quite rigorous in our methodologies of developing projects. So we have a very good number of success. We estimate that if we have about 70 to 80% of success in terms of impact, that's a success for us and for our partners. That's even more important. So happily, things are going very well. And actually, Africa. I mean, I'm the VP for Africa, so I should say this so that I can pay a tribute to my teams. Is that we have actually higher rate of success than in the other regions. So I think it's a good practice to have.
And Maher, just finally, I mean, what is it that you're measuring in the short term in terms of success with NigerDoc?
I think a higher flow of projects and companies that come to register within our free zone, which is a big focus for our group. We are basically an enabler of trade. Our free zone and many other free zones that are set up in Nigeria, we're trying to create a better level of transparency, reliability in terms of power and access to infrastructure, And I think the more we focus on making sure that those very key enabling factors are in place, will increase the level of interest and investment and flow of funds into the continent. And if we can help to improve the flow of trade into the African continent, then that gives us more purpose. And that's a success factor for us.
Optimistic in the short term?
I am very optimistic.
Great.
Yes.
Maher, Sergio, thank you so much. Thanks everyone for listening.
Thank you.
We're going to go this way.
Looking for an advantage? Explore a country with arable land in abundance, where crops thrive in a climate for growth, where land and sea are rich with life. A land with connected infrastructure and agriculture with global ambitions. Be part of Africa's growth story. Advantage Angola.
Please welcome Steve Murugi, Head of Programs and Partnerships, AMREF Health Africa UK, Sarmad Lone, Regional Head, Client Coverage, Corporate Commercial and Institutional Banking, Africa and Middle East, Standard Chartered, and Bloomberg's Malika Kapoor.
Yeah.
Steve right there. Thank you for being with us. And look, this is just a reality of the world we live in. We were hoping to have a guest join us via a Zoom from Senegal, but we've had some technical difficulties, so I apologize he isn't able to join us, but that's just the world we live in now, right? Thank you so much for being with us. And I really want to take the next few minutes to talk about how we can build up the pharmaceutical sector within Africa, the domestic pharmaceutical sector. And I came across one statistic when I was prepping for this session, honestly, which startled me, and I wanted to share that with you all. If you look at Africa, India, and China, we're talking about populations of over 1 billion people, right? 1.2, 1.4 billion people. India has 10,000 drug manufacturers for its 1.2, 1.3 billion people. China has 5,000. Obviously, I'm going to say Africa is a lot less. Any idea how many drug manufacturers there are in Africa to serve over 1 billion people? Sorry, how many? 100. You're really pessimistic. Anybody else? Any idea? You want to throw out a number? Okay, show of hands. Below 5,000 or above 5,000? Below 3,000? Below 3,000? Below 1,000? Okay. 375, right? So that's really, really, really low. There's a lot of work to be done. And it's no wonder then, right, that you think Africa imports most of its medicines, and depending which part of Africa we are importing anywhere between 70 to 90% of the medicines are imported into Africa. So against this backdrop, Steve, let me begin with you. What do you think has been the biggest learning for Africa from the pandemic?
Yeah, I mean, the biggest learning, first of all, thank you for having us. The biggest learning for us in Africa is you need to have your own supplies to be responsive, to be able to plan. But the biggest lesson, I suppose, is if you're overly reliant on other countries, other partners for your vaccines, you're always at the back of the queue, right? So, as you said, a population of 1.2 billion, to be importing up to 99% of your vaccines, it's very difficult for you to assure your populations of health security. So you can't have the health security that other parts of the world enjoy.
Absolutely. I mean, Sarma, do you want to add to that? What, from your point of view, from Standard Chartered, which of course is one of the sponsors of this event, from Standard Chartered's point of view, what was your biggest lesson or learning from the pandemic?
Thank you, Malika. To start with, I'm an optimist. So, and there are some green shoots over there. I'm sure you and some of the other colleagues in the room will be familiar with some good work being done by South African pharma company Aspen with Johnson's, right? Limited in scope and didn't take off as widely, as prolific as Pfizer and Moderna, but good beginning. But data you mentioned in starting the conversation is startling. I saw the same data and I was shocked.
Right.
I think Yeah, and I'll come to the work StandChart has done. I'll briefly touch upon it. I think the overall challenge specific to this point, which feeds into some of the other points when you talk about the trade corridors Africa has with the world, and the Africa Free Trade Agreement, we'll come to that,
Yeah.
is the same challenge where Africa is reliant on importing from abroad.
Right.
In the most remarkable and significant way. And that has been manifest in this crisis. Now, thank God, the pandemic didn't affect Africa as badly as affected some of the other parts of the world. We're quite blessed with that, and may it remain that way. But the challenge is the infrastructure in terms of technology, healthcare, support base in Africa is really weak, right? And the backbone to support that infrastructure is not there. So commenting very briefly on StandChart, we were part of a number of concessional financing facility. One was specific to vaccine procurement, acquisition, and distribution, where we partnered up with AfriExim, a partner in DFI in Africa. And the other one was a global program where we came up with a $1 billion concessional financing, and overall Africa Middle East contribution from that facility was around $300 million, where we went out and gave out concessional funding at our cost to companies and businesses who were helping with the pandemic, with PPE, with vaccination, with all kinds of the pandemic support infrastructure.
You know, one thing you mentioned, and again, that surprised me, and we talked about this yesterday briefly, the Aspen Pharma Care facility that's opened in South Africa, which is to manufacture Johnson & Johnson vaccines. I've been reading reports, and you said it hasn't taken off. I've been reading reports, there hasn't been a single order. Why, Steve? Why do you think that might be the case?
Well, I mean, I think it would be difficult to answer the why without speculating. So I'll try not to speculate. But I think just two things I'd want to mention is we would want to see partners support manufacturers within the continent, especially the partners that are supplying the same vaccines to the continent. So that's the first thing. The second thing is the ecosystem. We have to look at manufacturing as part of a wider health ecosystem.
Correct.
So the science is just the beginning. You need to be able to move the science to the people that need it the most.
So the ecosystem, what you said, the backbone, we need that, right? What do you think needs to be the first thing to address? I mean, there are so many things. You said science is just the beginning. From your point of view, what's the first stepping stone?
So a couple of things, Malika, in no particular order. In the order I state may not be the right order, but for me, technology transfer.
Yeah.
See, when you look at Africa, the challenge today is Africa exports a lot of raw products and imports finished goods, right? And that's the backbone of the challenge, right? Where they're exporting crude and importing refined products. They're exporting copper and they're importing finished products, from cars to everything else,
right,
from cables. And that is, to me, the genesis, basic core ingredient which needs fixing. Now, there are good steps in terms of the Africa Free Trade Agreement, and if you look at, just to throw out some of the numbers, 2019 data, Africa imported roughly 600 billion, thereabouts, across the continent. 12% of that import was intra-Africa. That's the other thing.
Intra-Africa.
Intra-Africa,
okay. Right.
only
okay.
12%.
Right.
So one country, the biggest country, or one sector, the biggest sector, the car, after oil and gas, the biggest importation was cars. Africa imported cars worth $20 billion, $20 billion US dollars, $4 billion in the case of Nigeria alone. And the local component was 3%.
Really?
Yeah.
Yeah.
So this is what I'm talking about. You pick out any country, I can give a number of examples. Oil is being exported out by a number of oil exporting countries, raw crude oil, and refined finished products are importing in. So a number of countries, not to name names, are not seeing the upside that we have seen in oil and gas prices over the last couple of years to the same dimension, because the big spike is in the refined products and that not getting the upside, right? Or to the extent they are getting the upside in the crude product export, they have to pay back most, if not all, if not more than all, in the case of when they import back the refined product, right? So that is the challenge that needs to be addressed. I think a couple of other points, and stop me if you think I'm speaking too long. I think technology transfer, which was my first point. The second is intra-Africa trade. Now, the components for intra-Africa trade to flourish. And there are bureaucratic components and there are actual concerns. A lot of the African governments take tariffs from trade, so they should, right? But on margin, the system needs to evolve and develop to a level where the bleed out from the import compensates for the tariffs that they are getting, right? That requires cooperation, that requires trust, and that requires working together with the partners across the 51 African countries and the global trade partners. The third component is the one where we as a bank, Standard Chartered, are quite active, is the infrastructure bit. Yeah. The overall, for technology transfer, you need help from the developed countries, right? The G7, G20, plus India, China, the more sophisticated economies, whether you're talking pharma, whether you're talking power, you are talking sustainable energy, whatever else you have. So there is the technology transfer component, which you cannot deny. But in addition to the technology transfer, you need power on the ground.
Yes, of course.
To run these, industry, right? You need a digital backbone, infrastructure, Wi-Fi, telecom sophistication to connect to the cloud, right? To connect to the global centers. So that requires investment dollars. And that requires infrastructure investment. We are delighted we are contributing and playing our share, but that needs to multiply, raise to the power 20, in my view. The third thing is, and there are good examples, so we are delighted that Dangote refinery, as and when it comes online towards the end of this year or early next year, whenever the timeline is, will address the first point I was mentioning, the Africa exports crude and imports refined. So once you have Dangote refinery up and running, they will be refining their own crude and not only using in the domestic market, which is the biggest market in Nigeria, but exporting to other countries across. But the last point, and I'll finish over there, is that the infrastructure to move goods across borders needs to be developed. The flight connectivity from one country to another needs to improve. In some cases, not all the cases, you need to go to a third hub and then come back to a neighboring country.
Correct.
A number of examples, more than one I can quote. So those would be the kind of things when you talk about the broader infrastructure ecosystem, would be power, would be digital communications, and would be the road network, the bridges, the rails, and the safety and security to be able to use that infrastructure safely, securely.
Correct. It all creates that ecosystem. And Steve, yesterday when we chatted, you said something very interesting. You said for Africa to not be at the behest of the West, you know, yes, we have to make our own medicines. And you wish during the pandemic that one of the Western companies had perhaps shared their recipe.
Absolutely.
So that you all could make your own vaccines.
Absolutely.
But without this infrastructure in place that Sarmad has just pointed out, would Africa have actually been able to make those vaccines even if you were given the recipe?
Absolutely. I mean, if you just look in the last few months, the information that's coming out of South Africa and the research work that's been done by researchers in South Africa to replicate Moderna's mRNA vaccine, it shows that the capacity and capabilities is there. The question is our partners, willing to help accelerate that process? And this is why, for a long time, we've been calling for companies and the West to share IPs and to share the know-how and technology to give Africa a chance to be self-sustaining. So to answer your question, 1,000%, I think Africa is in a position to do so. Africa needs the support, and the conversation has already progressed. So if you look at what the AU has put together as a strategy to produce up to 60% of its own vaccine needs within the continent, the framework is there. It means more investment in R&D, more investment in capabilities, better regulation, better sharing across the countries, as you say, better trade policies. So it's all there. So the bigger question is, are partners who've partnered with us for many years going to come on board and help accelerate that process? So that's the fundamental piece. The second piece, to add to the points that were being made just now, is the wider ecosystem. So you've got infrastructure, you've got the supply chain, but you also need the health workforce. You need, health workers that are trained, that are capacitated, that are supported, that are incentivized to administer the vaccines. And then you also need communities that are mobilized and have the information so that they present themselves when these supplies are available. So I think it's a challenge to look at manufacturing in isolation. I think we need to take a step back and evaluate the entire ecosystem.
So you're saying that even if you had got the recipe from the West or from other companies, you all would have been able to make the vaccines in Africa. You're 1,000% sure you would have been able to do that. I guess the next question would be, if you didn't get the recipe, you need to reach a stage where you can create the recipe yourself, right?
Yeah.
So you're not dependent on other countries to share the secret sauce.
Yeah.
What do you need for that? Are we looking at huge investments in R&D, education, prevent the brain drain?
Yeah.
So talk to me about that.
Yeah, absolutely. I mean, so again, to your previous question, my optimism is driven by, the evidence. We've seen the work that's happened in South Africa, being able to replicate Moderna's vaccine. So if that's possible without Moderna's involvement, then that demonstrates that actually with a bit of support, collectively, that process can be accelerated. And to your what was the question you just asked?
Just saying that, we need to reach the stage where you can create the recipe yourself. Yeah. So we need more investment in R&D, in research.
Yeah, absolutely. I think, ultimately it's also a supply and demand question, right? So you do have players that want to come into the space, but perhaps are slightly cautious about the return on investment. Research and R&D is expensive. So yes, we want to invest in these areas, but we need to make sure that the market is there. We need to provide collectively as Africa that assurance that to manufacturers that if you make this investment, there is a market for you, and that means pooling mechanisms, pooling procurement mechanism, but it also means partners that supply largely the continent with vaccines and medicines to really tap into that African market as well.
Salman, I want to talk to you about human capital. I mean, obviously, a healthier population means, and we're not just talking about medicines and vaccines for COVID, we're talking about the pharmaceutical industry as a whole. So a healthier population means a healthier workforce, which then, of course, will have a trigger effect and help economic output, right? So talk to me about the importance of human capital and how developing a local pharmaceutical industry can actually help the GDP.
Well, listen, I think, Malika, it is existential in my view. And also, if I were to expand the scope of the question, I think it goes beyond the pharmaceutical industry into every facet of human life. It's all about human capital, right? My business, our business, the business of banking, the business of trade, finance, government, everything. It's existential to have the right framework. It's as important as safety and security and education. The next one is to have the right ingredients, to have develop people who are healthy, who are secure, and who have the right technical educational background to be able to support the growth of the economies and contribute to every segment, every facet of the country, of the economy they are in.
I just want to quickly go back to free trade. It's been on my mind that, I mean, you spoke about it, and I think that's absolutely important. So, Steve, from your point of view, how much of a game changer will that be to allow sort of smaller pharmaceutical companies manufacturing medicines in Africa by having that free trade agreement? How much of a game changer will that be for those companies who want to achieve scale? Because it's not worth it if you're not going to have a chance to achieve scale, right?
Exactly, but I think you've touched on it. You know, it is an incentive. It's an incentive because it means the environment is enabling. You know, ultimately, what it tells them is, you know, if there's a market for your product, but not only that, it means that the regulation and the policies will be conducive for you to do business. So it's a compelling case for manufacturers that perhaps have been discouraged previously, and this is why we also call on partners that supply the vaccines and the medicines to the continent largely to tap into that market. I think that's a significant part of it, because you do have countries that are still reliant on these donations, whether you're thinking Gavi as a vaccine alliance. So if Gavi taps into that market, it's really encouraging for the players within the continent.
You know, this awareness and realization that Africa needs to be manufacturing its own medicines, this isn't new. We've been talking about this actually for decades. But do you think the pandemic is a turning point, and do you think we're actually going to see a difference being made now? Steve, I'll go to you first, and Sarmad, I'll come to you for the last word after this.
Yeah, absolutely. I think what the last 2.5 years have shown Africa is, you cannot have political security, economic security without health security. I think that's been significantly clear. I think it's also been very clear that you cannot be over-reliant on partners, on goodwill for you to deliver on health security. So I think that is a turning point, and we've seen a lot of players and stakeholders and governments collaborate, you know, and come together and really develop a framework that's clear, that stipulates this is where we want to go. We want to be able to produce at least 60% of our own vaccines by this year, and this is how we get there. This is how we get there. This is what we expect from our other partners and stakeholders. What we've seen as AMREF, you know, an African-led organization that works across many African communities to address the barriers that keep communities from accessing good health, is also the idea that you do need to have a resilient health system. You do need to have that supported workforce. You need to have all these things in place for your science to be effective.
Sarmad, last word from you. From what you're hearing and seeing on the ground in Africa, are we at a turning point? Is the pandemic, you know, going to be what it takes to actually really create that change in Africa and really give the local the pharmaceutical industry, the impetus to change?
Most certainly, I think, and I would again add to the comment which I said before on a couple of themes. I think the entire world, Malika, is in quite a unique place in terms of lessons from the pandemic. We have seen over the last 2.5 years developments which are black swan events. Honestly, no one of us imagined, I didn't, that you will see the kind of backlogs that we have seen in the last 2.5 years, the kind of shortages you have seen in the last 2.5 years, the lump up or backlog and delay at the ports you have seen. So I think it's a lesson for the entire world. In every sector, in every segment, pharmaceutical is existential from a healthcare perspective. So absolutely, there are lessons to be learned by everybody.
It's a wake-up call.
It's a wake-up call, and it's a wake-up call. And I see a lot of green shoots, a lot of positive takeaways. We've passed through a very tough 2.5 years. The world is coming out, and with a lot of good lessons.
Well, that's a good note to end on. Green shoots of recovery all around.
Thank you.
Sarmad,
Asante sana.
Thank you very much. Thank you.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
Please welcome Bloomberg's Henrique Almeida.
Good afternoon. Our next guest here today is Vera Davos Souza, Angola's finance minister. For those of you who don't know, Vera Davos Souza was Angola's first female finance minister. She's also the youngest minister to serve in President João Lourenço's government. But even though she's just 38 years old, her experience in leadership roles in Angola speaks for itself. Before becoming finance minister, Vera Davos Souza was a regular guest on TV speaking on financial markets. She's an author of a book in public finance. And later, she became the head of Angola's Capital Markets Commission. Now, as finance minister, she's completed a 3-year program with the IMF, implemented painful reforms like the liberalization of the Angolan Kwanza, succeeded on extending foreign debt repayments with creditors during COVID, and had to deal with a 5-year recession that just ended in 2020. Today, her efforts seem to be paying off. Angola's economy is set to grow almost 3% this year. The Kwanza has become one of the world's best performing currencies, and Angola recently became the second African nation after Nigeria to sell debt in international markets. But that's not all. Angola is gearing up now for its first ever IPO. In June 9, it plans to sell shares in the nation's biggest bank, Banco BAE. That will mark the start of trading in Angola's stock exchange. I would now like to invite you to join me in the virtual interview with Vera Davos Souza. Thank you.
Minister Davos Souza, thank you for joining us today for this virtual interview. I know financial markets is an area you are familiar with, so I'd like to start by asking you if you think the timing is right for Banco BAE, Angola's biggest bank, to list shares in the Luanda Stock Exchange next month.
Thank you for the question. Well, it's a good question because we live moments of uncertainty and probably with less liquidity available for investing in some types of assets. But our experience shows that even under difficult moments, we can manage to moving forward, implementing our programs. Looking back to the past 2 years, 2 years and 9 months, when the privatization program started, we had COVID, we had a financial and economic crisis. And despite that, we managed to sell 84 assets from our privatization program. So it's quite remarkable considering the challenges of the circumstances. So we are optimistic about this offering, this IPO. The local investors probably would be the first to put themselves on the pole position to participate. But the international investors that already know the market, the opportunity and the challenges, probably they will also follow it closely and at the end of the day, maybe make an offer. So yes, we think we can manage to move forward despite all the circumstances that we are living with.
So I know other listings are on the way, but what investors are really thinking about is when Angola will carry out the IPO of state-owned oil companies Sonangol and Endiama. When will that be, Mr. Minister?
That's the $1 million question. Well, we want to move on when we feel ready. We don't want to move and feel and realize that the market is still uncomfortable or suspicious about any information that the company didn't disclose disclose as better as possible. So we want to go with a balance sheet as transparent as possible, with all the assets recovery issues completely solved, the trials and the lawsuits. So we still have a complex moment within Sonangol. In Yama, a little bit less, but both companies are under a very complex restructuring program. When it finished, we hope at 1 year, 1.5 years, when it finished, we will feel more comfortable to go through a due diligence, and after that, to move on selling a minority part of those companies.
So there is no fixed date yet for the IPO of Sonangol, is there? Not yet.
Not a fixed date. We are working for 12 to 18 months perspective goal, but depends on how far we will move under the process that are ongoing regarding some assets that Sonangol are privatizing, some assets that Sonangol are recovering, and also the register of some assets that are it's already recovered but need to be within the books of Sonangol.
Great. Moving on, I'd like to ask you a question about the current international setting. The EU has indicated that it plans to step up cooperation with African countries to increase the supply of oil and gas to the Euro region. Is this something Angola is ready to do? And if so, has Angola held talks with the EU about boosting energy supplies?
We have the will, we have the political will, and we have the openness to do it. We still work with EU in so many fronts that work in one more. It's perfectly, it's completely reasonable. But we need to do a lot of homework to be ready to address that needs. What I mean by that, because we are coming from a scenario where our oil production were falling. So we were motivating the oil companies to do more investments. We revised our law on marginal fields. We revised our fiscal framework for whom are investing on that sector, and we are seeing the first signs of this coming, but it will take time. The investments start moving now, and we will see in 2 to 5 years the results of the investments that are happening now. So yes, we want to do it. Yes, we are preparing ourselves to do it, but it will take time for us to be able to address in the expectations that will come from the EU if we compare to our actual production capacity.
For now, higher crude prices has added extra revenue for Angola's coffers. How do you plan to use that extra revenue, Minister?
First of all, we want to rebuild our treasury reserves. We want to be ready to address future challenges. We don't want to revive the experience that we live with the COVID. So we build our treasury reserves. We want to be less aggressive on the financing side. So go less for financing, external and internal, and especially internal if we consider the potential of crowding out, because we are totally committed with diversification of our economy. For that to happen, we need to give to the commercial banks space for them to finance the private sector. So if we go less to the internal market, we will see more from the liquidity of the system going to the private sector. So it's something that we also want to address. Use less space from our financing needs and compensate with these extra revenues that will come. So also some projects that used to be there to be finished with more than 80% of physical execution is something that we also want to address, close it and put it at disposal of the population because it's costly to make them unfinished for so many years.
So you don't want to take many risks. But how do you see oil prices? I mean, they're trading at above $100 per barrel. Do you expect oil prices to remain at that level for some time?
Well, we need to consider that the circumstances that are putting the price at that level are geopolitical, so are not structural. So we want to be conservative because we know that if the geopolitical tension be solved, then we start in a new era of more peaceful moments. Probably we will see the price dropping. So that's why we want to be as conservative as possible to be ready to not take advantage of that windfall. So $59 per barrel is the price that we are ready to work with because we prepare our 2022 budget with that price. Anything above this, we intend to use in the terms that I just mentioned.
Minister, I'll wrap this up with the last question, and I wanted to ask you about your economic forecasts. Angola has been benefiting from higher oil prices and also diversifying its economy. I know you have a projection of 2.4% growth for this year. Are you revising that forecast? And just finally, do you plan to issue more Eurobonds this year? You were the second country to do so in Africa this year. Are you planning to issue more Eurobonds this year? Thank you.
Regarding the GDP, yes, the end of March projections, we are seeing our GDP growing slightly more than 2.4%, 2.7 is what we are expecting, considering the same oil production that we have in our budget, $1.14 million barrels per day, and $100 per barrel, considering that price of reference. So 2.7 instead of 2.4. Let's see what happened. Regarding the Eurobond market, well, we are studying now the ESG framework. We are studying that possibility. We are in a very early stage, so we didn't decide yet when we want to move on. But yes, it's something that we are looking at. ESG and also a possible opportunity for going further with liability management operations. So that's the two windows that we are exploring.
Minister Vera Davos Souza, thank you for joining us today.
Thank you. My pleasure.
Please welcome Razia Khan, Head of Research, Africa and Middle East, Standard Chartered, and Gregory Smith, economist and author, Where Credit is Due, and Bloomberg's David Malinga.
Thank you very much for everyone. We're going to shift gears a little bit and get into the debt issue that has become the Africa debt issue. I will give you just a few numbers before we get into it. And these are from the IMF between 2015 and 2021. We saw that the number of countries in debt distress increased from 2 to 6. While the number of countries at a high level of debt distress increased from 6 to 14. Those more than doubled. And the number of countries at moderate level of debt distress increased from 2 to 6. And those at a low level of debt distress increased from 6 to none. So I won't give you any other figures. We'll be visualizing some on the board. But just to kick it off with you, Razia, when and how did we get from Africa Rising a few years ago to now Africa debt distressed?
That's a very good question, David, and I think we need to put this in perspective. We know that African growth had been very robust since around 2001. We were seeing Africa outperforming a lot of other regions in terms of its growth trajectory. There was a lot of optimism about what could be done with structural transformation, the rise of the middle class, greater urbanization, productivity gains. None of those issues have really gone away. But we also know that debt is that much more of a preoccupation today, given the increase in external borrowing that we had seen from the region, especially on more commercial terms. Now, I'm going to say something controversial. When we look at the history of debt crises, the origins of that can typically be found in excessive liquidity conditions in the creditor countries, in the creditor locations, rather than anything that changes dramatically on the part of the borrower. What I'm saying essentially is look back at the global financial crisis. Look at what happened with QE1, QE2, QE3, the flood of liquidity, that wall of liquidity finding higher returns. And that might explain a little bit of what we see today. So yes, commodity prices softened end of 2014, 2015. Africa's growth momentum did slow. Suddenly the amount of debt that had been taken on looked more worrying. We've had the COVID crisis. We now have the Russia-Ukraine crisis. This creates greater headwinds to growth in the region. But it would be wrong to only look at what borrowing we had seen from the region. Look at the excessive risk-taking. Look at liquidity conditions elsewhere. And even now, what is the key trigger for the greater concern around the sustainability of African debt? It's the ease of being able to refinance what has already been borrowed. It's rising US Treasury yields. It's how difficult and how much more this complicates the situation for African borrowers. We do need to look at it holistically.
And I'll immediately ask you about the entry of China. If you talk about the ease or not ease of borrowing and refinancing. Thanks, Ted. Yeah, I mean, China came in a big way into Africa's debt market, although the lending has slowed a little bit from Beijing. I mean, it's still a very strong direct creditor to Africa. Take us through how things have evolved and how do you see us moving from here?
So here's the key point. China's role as a source of financing for Africa has been very much more politicized in recent years. We know that with the issues around the need for a DSSI, with now the common framework under consideration, everyone is focused on where China lent in the region. But actually, if you look at the numbers, China's lending to Africa, excluding Angola, had peaked as early as 2013. Including Angola, China's lending to Africa peaked at around 2016. So it's not really the case that we've been seeing that much more, that great an increase in lending by Chinese entities. Yes, there are debt issues that need to be worked out now, but in overall terms, I think if we look at the financing need in Africa, the need to be able to secure concessional or semi-concessional long-term financing, there is still absolutely a role that China should be playing, and we believe that China will continue to play in lending to the region.
Thank you. Gregory, you wrote a wonderful book. This is how it looks. How Africa's debt can be a benefit, not a burden. And I just want to read a small excerpt from it. Smart suits arriving in ad hoc financing, or ministers flying solo to global financial centers should not drive borrowing and investment decisions. Instead, they should be guided by the process of active debt management or by well thought out strategies based on the results of a country's regular debt sustainability analysis. Now, this is your book, right? Does anyone take your advice?
Well, first of all, the book was written as a culmination of 15 years moving around the continent, living, working, traveling. And I picked up ideas from many different policymakers in many different countries. So I feel when I'm writing, I'm summarizing some of the views of the continent as well as giving my own advice. But what I'd say is we certainly need a move to better borrowing. And I'm among the sort of 55 African countries, there are sort of 3 typical cases I find. One is heads in the sand, complete sort of ignoring the increasing debt risks, not making any steps towards improving it. But most common is a situation where I'm talking to really bright technical experts in central banks, ministries of finance, in businesses, and they know the risks, they know what's happening. But there's a slight disconnect to those technical policymakers and the politicians who want to win an election in 18 months or a year down the line. And they don't want to hear about medium-term risks. They want to hear about what ribbons can we cut, what policies can we do, what taxes can we reduce in order to get votes at the next ballot. And that sort of is a difficult situation where the technical experts know what they're doing. We just can't get the message through to the politicians. And then there's a third type of country where it's all lined up. There's a wonderful mix of technical expertise and politicians wanting to do the right thing. And last Friday I was in Benin and Cotonou, and that's one country where I think they've made some excellent decisions in the way they are managing their debt, in the way they are investing, and that they're linking their use of proceeds on their bonds to sustainable ends by signalling we're going to spend X and Y on these specific sustainable development goals.
Yeah. Over the last 5 years, about 5 African countries, the debt to GDP has been over 100%, Greg. And it has become really an issue, a talking issue. In Nairobi, where I know you were last week, there's an election coming up in August, and it is a debt issue. Even when you meet ordinary folks, in meeting rooms, on the street, they know the debt to GDP, they know how much debt has been taken on over the previous few years. Do you think African countries, for now, at least the ones that were worrisome, have hit rock bottom in terms of worrying indebtedness? Or are we, yet to see worse off situations and probably even more defaults?
We've certainly got worrisome debt conditions in a number of countries. And when I sort of diagnose a debt crisis, I try and sort of work out what is the root of the problem. It can be a revenue problem, that is a government not collecting enough tax. It's an inability to tax its informal sector in order to service the debt. It could be an export problem. They're not earning enough foreign currency to service their external debt. Or it could be an investment problem where the right decisions haven't been made. And debt's a really complex thing, and that's why it attracts a vibrant debate and different numbers are thrown around. And I sort of, on my mind at the moment is driving through Nairobi traffic last week and seeing that massive highway up on stilts next to the road I've been using for years. And that's an investment which, if they can collect the revenues from tolls, is a viable project. It's a PPP. It's something that pays for itself. But if those tolls get waived by a politician like they have in South Africa, suddenly it's a liability and something government will have to pay for. So it really, we've got all sorts of issues underlying those debt problems. In each country it's different, and debt can move quickly. You can be in good territory and then quickly debt jumps through a large exchange rate depreciation, or it can come back down, as in the case of Angola, where these high oil prices have helped the Kwanzaa and debt's moved quite rapidly in the other direction.
Rosia, talk to us about the common framework. It was a well-intentioned, program after the pandemic hit, and a lot of countries' fiscus came under, a lot of pressure. But it looks like it did not exactly work out as at least, envisioned. For instance, why did China and the private creditors do more as early anticipated?
So I think when we look back and we look at the proposal of the DSSI in the immediate aftermath of the onset of the COVID crisis, that debt service suspension was supposed to free up the space for many borrowing countries. And we know that the IMF had a way, and other multilateral lenders had a way of financing the debt service suspension that they were offering. For a lot of bilateral creditors, this came right out of their aid budgets, and it was complicated in terms of private sector participation. Ratings agencies suggested that anything that changes the original contractual terms of that debt obligation, that results in a meaningfully different value being ascribed to that debt, is a default. Now, for many African countries, Greg just mentioned that he'd come back from Benin. The issue was, is it worth going for the DSSI if we don't have access to financial markets, to international capital markets as a result? Is the cost too high to pay given the rather limited benefits? And there's a lot of controversy about this at the time. I think what was forgotten in that debate was the whole issue should have been, how do you crowd in more capital flows to borrowing countries at a time when we had seen, because of greater risk aversion, because of financial market volatility, we had seen the withdrawal of capital from emerging and frontier markets alike. This was not the right time to come up with a proposal that made it even more difficult to finance developments in African countries. So I think looking back at the experience of the DSSI, we'll all think with some amazement, how did anyone think this was a clever solution to actually make the situations of countries even worse because of the potential risks involved? Now, the common framework, of course, is supposed to evolve from that. It's the idea that some countries have debt situations that are so problematic that they would do a lot better to just resolve that at the outset. And this time around, there is a core requirement of comparable treatment of all creditors. The problem is, as we know, it's been a slow process. It's been difficult to organize. Very few countries have actually held up their hands and said, we want a common framework type restructuring, either because they haven't seen the benefits, so there's a great reluctance to go down that route unless absolutely forced to. So there's a lot that needs to be worked on still. Increasingly, some creditors are starting to think, well, if a debt situation is clearly unsustainable, wouldn't it be a better action on the part of the debtor country or the debtor sovereign to seek common framework type restructuring at the onset, at the very start? But of course, to get to that point, we've got to see successful conclusion of a common framework restructuring. Here we are, May 2022, we haven't yet seen that.
What do you think is going to happen?
Much more coordination is needed. The IFIs have put out this idea that in order to encourage debtor countries to sign up for the common framework, maybe they need to be offered blanket debt service relief from the very outset when they request common framework type treatment. Maybe this will make it more attractive for those countries to think of the debt restructuring that is required. Now, before we even get into that, let's learn from the lessons of the recent past. Is this going to be treated as a default? How will ratings agencies react? Is it really a workable solution? There is a much broader discussion still to be had on this.
And good that you talked about the rating agencies. It's a question that I wanted to follow up with. There have been some governments, some leaders, particularly Ghana, which has not been very comfortable with the way rating agencies have been assessing and later concluding on their status. Should there be a different way in certain conditions? Rating agencies should be assessing and making opinions on some of these sovereigns.
Well, the argument of the government of Ghana is that they were about to embark on an even deeper fiscal consolidation, that there had been revenue measures that had been outlined, there was a willingness to cut spending, more than had been announced in the budget, and that this was about to be rolled out. But preempting that, they did suffer downgrades from some rating agencies, and the government of Ghana clearly felt that that was a little unfair, that they should have been given more time. The ratings agencies, on the other hand, were saying, Ghana, look at the yields on the euro bonds. You are locked out of any easy refinancing of your debt. You're locked out of international capital markets. And the rating is essentially just a reflection of that situation. So we could argue this point at length. I see you've brought up the chart of Ghana's Eurobond debt maturities, and everyone will be able to see from this that Ghana does have some time to really go for it in terms of the fiscal consolidation. If, on the other hand, there isn't sufficient evidence that that consolidation is happening, that it's meaningful, then when it comes to refinancing some of those upcoming Eurobond maturities, look at what happens in 2025, there could be an issue. So the broad consensus is Ghana can get through this year. It has relatively little external debt service, $2.7 billion thereabouts. It's got the reserves to cover that. The bigger issue is, what does Ghana need to do to regain the confidence of the markets? And are we seeing evidence that that is happening?
Okay. And this is a question for both of you from Santos, from the audience. It looks like the African debt is being put in sectors that do not provide returns to the country. Africa will still need the cash and therefore increase the debts, which can create a problem to its sustainability. Greg, do you want to start?
Very quickly, clearer use of proceeds. So when people are borrowing, there's an articulate plan on what the money needs to be used for. And behind that plan is a robust framework for public investment management. We've had a wonderful 15 years for African countries' access to the global financial markets. But what we haven't done is made steps in terms of really making solid investment decisions. And that requires governments to step up with a framework, a pipeline of projects that are rigorously analysed, and a lot of scrutiny goes in publicly before projects are agreed to. So I think with that robust investment framework, a lot of African countries can borrow much better.
Rosie?
There is a need for greater debt transparency, and what we've observed over the last decade or so is that when we have conditions of excess liquidity, excessive risk-taking, some might argue, with the benefits of hindsight, not enough attention is paid to the idea of debt transparency, exactly what is being borrowed, for whom, from whom, with what tenors, where is it going, what are the use of those proceeds, do the returns really cut it, will you be able to repay the debt? I think with the benefit of the situation where we are today, hindsight always counts for so much. There's going to be a real push for greater debt transparency.
Greg, as your last word, with all these uncertainties, Russia's war in Ukraine and some of the other conflicts, the externalities they're bringing in, we're seeing, coups in the Sahel, war in Ethiopia, in Somalia. I mean, the pandemic is still the pandemic. How can countries borrow safely?
There's been a recent string of bad luck, and there will be more bad luck to come, and we just don't know when and exactly what. So there's a huge amount of work. There's no silver bullet. There's not one thing you can say, okay, this will make borrowing work. There's a huge amount of hard work to be done through modern debt management, through the design of strategies, through building a sustainable brand to attract financing. But one thing I think the lessons from the 80s and 90s were African solutions weren't in the center, and I think they need to be. And I think the architects of the system need to be coming up with a plan that if several countries do need assistance, do default, that there is a way of supporting them through a framework. And that is exactly where we need African solutions there, and we need involvement of many different stakeholders. But we need a clear recognition there are massive investment needs. And that's the challenge, whether it's climate adaptation, whether it's delivering on the Sustainable Development Goals. Whatever solution we put in place, we need to ensure that it sows the seeds to attract that much-needed investment.
Rose, is the last word. Briefly tell us about spreads and your outlook on that. I know there are very many factors, including the global rising yields currently. Is it going to be bad, or in the foreseeable future, do we see a silver lining on the spreads?
Uncomfortable situation for many borrowers potentially when they look at the volatility in markets. When anyone looks at what has happened to US Treasury yields, continues to happen even right now. The question is, when is the calm restored? When does it all settle? And I think on the part of borrowing sovereigns, a lot of thought needs to be given to how do you create more resilience around these conditions. So we're seeing an increasing number of countries saying we're going to tap all of the concessional sources of external financing first. It makes sense to do that. But to Greg's point about finding a way to do this sustainably, finding a way to do this safely, finding a way to be more resilient to this kind of financial market volatility, this remains a very important consideration. I'd just like to end, I know that we may be out of time, but with a comment. I come from a relatively small African economy. Quite frustratingly, it hasn't borrowed much. So we're talking today about all the countries that have borrowed, have seen the growth on the back of it. There is another side to this as well. And the only thing I would leave the audience with is cautioning against too much of a generalization. When we're talking about excessive debt levels, what is our perspective exactly? What kind of growth can become possible if we see the borrowing happening in a sustainable, transparent way? This could be setting the scene for this space in the next 10 years.
On that note, thank you so much, Razia. Thank you, Greg, for all your insights. Thank you to the audience. And thanks to Standard Chartered for sponsoring this session. Have a good rest of the afternoon. Thank you.
Please welcome James Mwangi, CEO Equity Group, and Bloomberg's Jennifer Zabazaja.
Very good.
Thank you. James, we're the last session.
Yeah, thank you.
Thanks everyone for being here. Thank you so much, James, for being here. I have to start with this because you've been to London a few times over the past few months. I think 2 times in the past 2 months, is that correct?
That's true.
What are you doing here? Is there some investment interest here? Can you share a little bit more with the audience?
Broadly, we are trying to mobilize support for economic recovery and resilient plan for Africa. And we felt London as home for a large capital market. That's where we would really like to do. The second one is really to engage and involve with the Commonwealth. That's 54 countries. If you have the backing of 54 countries, and with 19 of those countries being in Africa, then trade and investment becomes viable. And of course, to talk to investors like the ones with us here.
Well, and what does that dialogue look like when you're talking with some of these investors and the Commonwealth specifically?
The dialogue, as I said, is about in trade and investment with Africa. It's about the opportunities that Africa is presenting, and particularly given that the world seems to be resetting itself. We see, and we had the team that was just ahead of us talking about the concentration in global production, whether like the situation we are because of Russia and Ukraine as regards food, when it comes to edible oils, the concentration of Indonesia and Malaysia. And the question is, can Africa help to diversify these global supply chains? Can we reset the world and get Africa to play a rightful place? And is Africa, given the last 25 years of very rapid growth, no recession until COVID hit, is that really a testament that Africa is of age to attract capital for a return? So that is the debate, and we have been surprised by the positive sentiments that have come out of it. We have had, for instance, the Commonwealth signing in and saying, yeah, we'll have this as a major subject for deliberations in Kigali in June. We've had the IFC and the World Bank Group saying this is a credible plan. We shall support you to align the nation or countries in implementing the plans such that the policy coherence can support the private sector. But the big one is that maybe it is time to try the private sector to lead the development. We had the conversation that was here about what is debt levels in the countries or in Africa, but we are now saying the private sector leader can lead transformation using trade and investment.
But what makes you so optimistic about the fact that Africa could potentially be the resetting factor for the world, considering, I mean, the debt challenges, I mean, you just mentioned it right there. I mean, what is the convincing factor for you here?
2 aspects. The first one is what Africa brings on the table. Africa brings a young population of 1.2 billion consumers. Let's talk that really as a solid market. The second one is Africa still holds 60% of valuable land. So when it comes to agriculture, whether it's wheat, whether it's palm oil, Africa can bounce back. Nigeria and DRC in the 60s were the largest palm oil producers in the world. So the competitive advantage of Africa plugging in to solve some of those broken supply chains is real. The second and third aspect is ideology. It looks like we are where we are because of differences in ideology. Africa is only interested in transforming itself. It's not really bringing in the ideological issues. It's neither right nor left for Africa. The question is, Africa wants to utilize its resources. And the last one maybe is the endowment Africa has in natural resources or the extractive industry. So it's not just about agriculture. It's a question of value addition on African natural resources on the continent. Instead of selling cobalt, why don't we do batteries? Instead of copper sheets, why don't we sell copper wire? So that is the argument that Africa is putting on the table. And as you see, all those are opportunities for the private sector.
But regardless of ideology, I mean, there's still a problem of being indebted to other countries, right? I mean, that's still some of the issues that we're seeing some of these countries deal with. I mean, how do you get around that?
We're getting around that using private sector capital. We're not telling the governments to borrow. We don't want the governments to be the investors. We want the governments to be facilitators, create the enabling environment, and bring certainty about markets, and manage microeconomic environment. That's it. The rest is capital markets. Let investors see the opportunity that Africa, and let investors reposition themselves. There are so many investors that are coming out of Russia. Is Africa the next destination? We are talking about fertilizer. 35% of African fertilizer is coming to Russia. If you've got 35% of the African market of fertilizer, that will support 2 or 3 factories in the African continent. That's all that we are asking for.
How is that working, particularly, you're in Kenya specifically. Tell us how that's working in East Africa specifically. And you mentioned the mobilization of governments. I mean, everybody has to work together, right? So how is that playing out right now?
We've been very lucky that the governments for particularly Kenya, Uganda, Rwanda, Tanzania, DRC have come up front and said, this is our priorities. This is what we believe are competitive advantage. Kenya has come out with health. It has come out with low-cost housing. It has come with agriculture and food security. And it has come with low-cost manufacturing. It wants to manufacture building materials in the continent. Uganda have said we have very good agricultural potential. Let's unlock that potential. We can do our health, and we can also develop our oil and gas. So every country has come out with what it's good at. And essentially then this is coming at a time when the continent has come together and said, can we promote cross-border trade, the African continental free trade area? So it's neither an export-oriented or import substitution. It's more about trade within the region based on comparative advantage. And when 6 countries that forms a market of 300 million people come together and say, you produce what you are good at, and we produce, and let's trade across the border, then it means that the advantage that we are leveraging on is that commitment by the governments. Yeah.
In what ways are we seeing that working specifically?
I think we have seen that working very well in the 6 countries. Because if you look, DRC, for instance, have come up together with Zambia and said, let's sign a joint agreement and we start producing batteries. So you can see that collaboration. You see DRC doing road shows. Look at Rwanda. Rwanda has already passed, I've said, yeah, we ourselves, we want to host Kigali International Finance Center. This development will require a lot of financing. We have the right policy, we have the right investment policy. Let's attract international capital to Kigali, and then can facilitate. So everybody, Kenya has said, yeah, we have the right infrastructure. Can we also hub most of the companies, because we have good education system, we have good health, we have good infrastructure, and we are a logistic hub for the region. So everybody seems not to be competing with others just broadly, but competing on the basis of competitive advantage. And that is why we think, and that's what the private sector is looking for. Yeah.
So what are the hurdles then to getting, I know you and your team have the Africa 2025 Resilience and Recovery Plan. I mean, what are the hurdles to getting there? Because it all does sound great, right? But how do you actually take the right steps and ensure that you have your partners who are on the same page as you?
The first step was us coming on the table with demonstration. 25 years ago, Equity Group was non-existent. It was number 66 out of 66 in the ranking of in the financial sector in Kenya. Today, it's not just the largest bank in Kenya, but it's the second largest bank in DRC, second largest bank in Rwanda, and the fifth largest bank in Uganda, and on and on. That really demonstrates, in just those short 20 years, we have built an asset base of nearly $13 billion. So we have demonstrated that, yeah, you can manage the risk of Africa and can have a reasonable return. So that's the first thing, that this development plan is being sponsored by a private sector who is playing in the 6 countries that we are starting there. The second one is coherence in government policy. We have brought the governments on the table, we have discussed with them and said, put these if this is your focus, then put the right policies, and we will hold the global investors as they come to the region to get what is necessary. Now, what are the challenges? But just before the challenges, the fact that we have managed to get the Bretton Woods institutions led by IFC as a private sector arm to sign up to the plan and say, we want to be part of this. African Development Bank has signed in, Exim Bank has signed in, and 16 development banks in Europe, and says, we want to participate in project financing, we want to participate in syndication. Now, what remains is convincing the investing community around the perception. And I've had these last comments was about how do we change the perception that exists. If you look, the 6 countries we are fronting as the test tickets together maybe constitutes the fastest growing region anywhere in the world. But it appears, even as we speak, if you look, Kenya registered 7.5% GDP growth rate last year, Rwanda 10.5. So when you put all of them are above 6, when you put them together, a market of 300 million people, they're in one integrated economic block. Movement of goods and services is facilitated. Then it shows the market seems to be ready. But the perception out there is still about Africa. We are not talking about specific countries. We're not talking about region. So we need to help people to overcome that risk. The second one, of course, is the capital markets have not recognized, for instance, the policy reforms. Look at Kenya and its new constitutional dispensation, the institutional framework that allows even nullifications of presidential elections, and life goes on. Look at Rwanda and its new investment policies and regulatory framework. That needs to be sold a little bit better. We need to speak a little bit so that people change perception. I think the biggest handle is perception. Global capital.
Who do you think that's on then? Is it on yourself? Is it on the governments to change that messaging?
We have decided, and that's why we have been in London 3 times in 2 months.
3 times?
3 times in 2 months. It's simple. We said, we have a testimony. We have experienced this. We are listed in Kenya. We are cross-listed in Uganda, in Rwanda. Can we tell the story? So the narrative needs to be changed. But we felt we had a good basis of telling the narrative. Of course, the Kenya government is in town this week on a road show. They are really looking at defense stuff. So essentially, it is a collaborative effort.
Could that potentially mean a listing for you here?
We are saying we need to link with the global markets, essentially because the private sector, if that region takes off, the institutions and the companies operating in that region, if the transformation takes off, most likely they will require more liquid markets.
Yeah. And so let's just talk too, because I'm from the U.S. and I know you mentioned the Commonwealth and sort of the negotiations that you're having here. What about more in the West with the Biden administration? Have you had discussions with them? Because inevitably you want to get that perception and that messaging to them as well.
Broadly, we have brought in the American companies. Look at agriculture. We are saying John Deere, they have demonstrated the resilience of their tractors on the African continent. They have an office in South Africa. We have persuaded them to open an office in Nairobi. So the question is, when it comes to agriculture, we have visited Chicago twice and to attract the seed multiplication companies, because we really need a coordinated, coherent plan where everybody brings their competence and capability. It is more of attracting a cluster in every sector. When it's agriculture, you have seeds, you have tractors, you have capital. The reason why we're in London is to attract capital equipment manufacturers for agro-food processing, because essentially Europe has become maybe the most significant market for agricultural export from the region. So you want to synergize and create a win-win strategy.
And when we talk about opportunity, just in the few seconds that we have, I'm going to go over just a few seconds, I'm sorry. And I have to ask you this because in Kenya, of course, specifically, when we think about sort of opportunities and the youthful population that's there, crypto is a lot of the conversation, right, that is happening globally. Is that part of your plan? And where does sort of crypto play into long-term strategy for you and your team?
Africa will benefit substantially from leapfrogging on fourth industrial technologies. And cryptocurrency is one of them. The big data is one of them. Remember, like we have seen with the mobile technology, because Africa didn't have landlines. When mobile phones came, it became a global leader. When it came to application development, innovations using the mobile technology, Nairobi is still a global leader. So we are hoping that use of technology, particularly data, particularly artificial intelligence, will be a major basis of leapfrogging, because we are not talking about existing manufacturing capacity. We are saying setting afresh. So the use of technology can make Africa very competitive because of lack of legacy systems. So it's really leapfrogging and making a leading productivity and efficiency center.
So you believe digital currencies as well play into that?
It will be part of this. Yeah. But the question is what it will allow it to play. If that will be the channel for capital flow, so be it.
Yeah, you're open to that?
But remember, if you look like Kenya, the mobile digital transactions or digital money is bigger than now hard currency. So cryptocurrency can as well complement the mobile money wallets. But essentially, we need to talk to the regulators. What will be the readiness of the regulators? So that would be the only thing that you need, because mobile money has been made possible because of regulation.
Right, absolutely. Yeah. And Nairobi, as we know, is a huge tech hub. So.
Yeah.
James, thank you so much. Oh, we have a question. Do we have time for a question? No, we don't. We asked a lot of questions. James, thank you so much for being here. We're definitely going to see you when you come back to London next time.
Thank you so much. Thank you very much.
Thank you, everybody.
The governor of the Bank of Ghana, Ernest Addison, speaks with Bloomberg's David Merritt.
Hello, and welcome to this session of the Invest Africa Summit from Bloomberg. My name is David Merritt. I'm the Senior Executive Editor here at Bloomberg for Europe, the Middle East, and Africa. And I am very delighted to be joined for this interview by Ernest Addison, who is the governor of the Bank of Ghana. Governor, thank you so much for joining Bloomberg today.
I'm very happy to be here, David.
Great. Well, let's dive straight in. And my first question is a question we could ask any central bank governor, I think, in the world at the moment, as governments and policymakers grapple with the threat of inflation. The problem in Ghana does seem to be particularly acute. We've had the latest reading in April, nearly 24%. In that environment, it's obviously impossible to have a policy rate that is higher, perhaps, than inflation. So how are you in this very, very turbulent environment, adapting your decision-making process to this new high inflation reality?
Well, thank you very much, David, for that question. I think that it's an issue which, in a sense, is baffling for all of us. A year ago, inflation in Ghana was near single digits. In particular, we were at 7.5%. And then we find ourselves a year later in high double digits. It's a very complicated environment. As you yourself are aware, we've just come out of COVID. Ghana, fortunately, was able to weather the impact of COVID well without recording a negative growth rate. And it seemed as if the economy had picked up significantly by the end of 2021 with a positive growth rate of about 5.4%. So at the central bank, we had anticipated this. In November last year, we raised the policy rate by 100 basis points. And then we were rather surprised by the inflation rate, which came out later on after that, in February in particular, which triggered the 250 basis points adjustment in the policy rate. This week, the MPC will be meeting. I do not want to preempt what the committee will decide, but I think it's a very complicated situation. As you said, inflation is about nearly at 24%, and we need to take a position on what to do with the current policy rate at 17%.
The spread for US bond yields, Ghana's spread has shot up again, and obviously that's something that people are looking at closely. External debt's going to be more costly, and prolonging the lack of access or loss of access to the market for Ghana. You can narrow that gap obviously by hiking rates domestically, and that's going to help presumably keep domestic lending taps open, but there are costs to that as well. So in all of this environment, when the numbers are really going against you, how do you see the role of the central bank in stabilizing the economy?
The role of the central bank in stabilizing has been very clear. I mean, we have a limited set of instruments, trying to manage liquidity and trying to manage interest rates. And that's what we have done in the last year or so. As you said, we have to be conscious of the impact of both the external developments and internal developments on exchange rates. And as if markets get tighter and we see capital beginning to flow out, obviously the interest rate instrument will have to do its part of the work. At home, we are trying to manage liquidity very tightly to ensure that we don't have excess liquidity fueling further inflation and exchange rate depreciation.
The inflation problem, as I said at the beginning, something that governments are grappling with, and many policymakers have not lived through periods of such high inflation in their professional experience. But the noises we're hearing from around the world say that the worst isn't upon us yet. The war in Ukraine is obviously disrupting things like global food supplies. We have a fertilizer shortage looming. So farming costs are obviously increasing. When you look forward the rest of this year, but into next year as well, where do you see that headline inflation rate peaking, or when might it peak? And is there a possibility of things turning back more favorably for Ghana and for the rest of Africa, perhaps, as the next year plays out?
I think that countries have different experiences. If you look at the inflation rates across Africa, they vary from country to country. And you rightly said that Ghana is one of the higher ones. The government and the central bank are very much aware of the problem. We have had very major decisions on fiscal consolidation. Expenditures have been cut by 20% this year. And as I said earlier on, we had raised the policy rate by 250 50 basis points. We expect that these measures would serve as an anchor to inflation. We had raised the primary reserve requirements for banks, which is also drawn liquidity from the economy. So broadly, all these fiscal and monetary measures that have been put in place should impact on aggregate demand. Yes, a lot of the shocks that we are seeing now tend to be supply side in nature, with food price shocks, oil price shocks, but we think that the West has already gone through the system, and we expect that inflation will be tapering off for the rest of the year.
You talked about cutting of public spending, obviously, and a large reduction there in order to help to tame inflation. What do you feel will be the outcome for overall economic growth? Of course, there needs to be a hit to the overall economy from all of these measures. Is it going to be manageable in the coming year, or are you concerned that growth will fall too far and all of the other impacts that might have?
You know, the Ghanaian situation, in a sense, also reflects what happened in 2020, where the government had a very expansionary stance on policy, and therefore there were many interventions that was put into place in order to protect lives and livelihoods. The impact of that was the real sector being more resilient than we see in other places. And we, as I said, we are beginning to see a pickup in growth in 2021. Some of the data that has come in so far for 2022 does not suggest that we are slowing down. So I believe that if we were to choose between the growth and inflation, the policy priority should be on managing the pace at which prices are increasing.
Absolutely. Thank you. I just want to pivot onto the question of currencies. And of course, the war in Ukraine has sparked a renewed debate, if you like, about the role of the dollar, the US dollar as a reserve currency. And there's been suggestions that maybe the era of the dollar's dominance is not going to continue. So is the Bank of Ghana diversifying holdings of reserve currencies? And if so, where and where else are you building up reserves? Is it in the Chinese currency? Is it euros? Where would you be diversifying those holdings?
This topic of reserve diversification became very popular when the US dollar was weaker and was not serving as an effective reserve currency, because most of developing countries and African countries in particular were holding the bulk of their reserves in US dollars. We do not have that situation today. Today, the dollar seems reasonably strong. The issue of what has happened in Russia and the sanctions that were imposed in Russian banks, I don't think presents an argument for reserve diversification for us. Secondly, the issue of the Chinese currency and the type of controls that China has on flows makes it very difficult for us to sort of substitute away from the dollar into the Chinese renminbi. I can say that for Ghana, the central bank has started a gold purchase program, domestic gold purchase program, where we are currently buying gold locally and sort of trying to raise the gold component in the level of our reserves. And this is where the current policy focus is.
Is that connected? I'm interested about the gold purchasing program as well. And as Africa's biggest gold producer, in a high inflationary environment as well, is that playing into your decision about building up gold reserves as a good place to be?
That's a very good question. Fortunately for us, most of the purchases are coming in from central bank profits that we have made over the years, and therefore doesn't really represent an additional push of liquidity into the system. And therefore, I don't see that conflict of fueling inflation further.
Yeah, I've got it. I just want to ask you a quick question about sovereign ratings agencies, and coming back to this question of sovereign debt and access to the market. The Ghanaian government has been critical about the impacts that the ratings agencies have on the pricing of debts, and the African Union has also echoed that criticism. Is there an alternative to the rating of debt? Should there be an African, a localized rating agency to assess the value and the riskiness of sovereign debt across the continent?
I'm not sure if it's about an African rating agency as to more about the methodology and assumptions that the rating companies use to make their assessment. In the case of Ghana, I think some of the issues that came up had to do with the assumptions that were driving the various forecasts. And then secondly, the timing of the assessment, given that all countries had been hit very badly by COVID, whether really this was the time to go out there for a ratings assessment, which in the view of some, probably not the appropriate time to have done that. And especially if you think of the fact that the whole world was going through a pandemic, and if you were to take out the pandemic from the modeling or account for the pandemic in the modeling, would they have reached the same conclusions that they reached? So I don't think it's so much about setting up an African rating firm. I think it's about methodology and timing and context and all of that.
Thank you. I just got time for one more question. I'm going to pivot to the topic of cryptocurrencies. It's been yet another very turbulent week for cryptocurrencies. And I know that the Bank of Central African States is cracking down on crypto after the adoption of Bitcoin by the Central African Republic, one of its member states. So where does the Bank of Ghana stand on crypto regulation? Again, something central banks are grappling with all around the world. And can you give us an update about how your eCity pilot project is going?
Well, we have come out to let the public know that we do not regulate crypto assets, and therefore, if you engage in any transactions in cryptocurrency, you're on your own. It's not an area where the central bank will be able to provide consumer protection. Now, the ECD, we're making fairly good progress on that. As you know, Ghana already has a culture of mobile money, which has helped a great deal with financial inclusion. So the average person on the street knows how to use their telephone to transfer digital value. And we are taking advantage of that background to develop a retail token-based type of instrument, which we call the central bank digital currency. There has been a pilot in different parts of the country, and the enthusiasm from the feedback that I got has been quite, people have been quite enthusiastic about having the opportunity to be part of the pilot, and gone on their way to reload the CBDC using their own resources to be able to carry out transactions, which is a good sign that by the end of the pilot, we would be able to proceed as planned.
What do you see the benefits for the economy if there's widespread adoption of digital currency?
I think further financial inclusion. We are looking at a system which can operate offline in the most remotest parts of the country. As I said, the populace here are already used to this mode of digital payments using telephones, but we are also looking at a card-based form of instruments that can also be used by those probably in the more urban areas. So yes, more financial inclusion, higher mobilization of savings resources, and hopefully that should help drive economic growth better. Fortunately for us also, we have the country adopted an ID strategy. I'm sure you're aware of the national identification schemes, which in a sense has helped improve identification in our economy, and therefore the issues of KYC and other dangers that come with these instruments are, in a sense, minimized.
Fantastic, Governor. Thank you so much. We're out of time, but we so appreciate you joining the Invest Africa Summit here at Bloomberg and sharing your insights. Governor of the Bank of Ghana, Ernest Addison, thank you very much for joining us.
Thank you very much, David. It's been a pleasure talking to you.
Thank you.
You being with us today. Thank you very much. A big thank you to our speakers and moderators, to our sponsors, Standard Chartered and Apex, Angola's private investment and export promotion agency. Most of all, thank you to all of you for being such an engaged audience, for sending the questions, for tweeting, and just to be with us today. Thank you very much, and please join us for lunch.